and actually identify people. And so we're very sophisticated on our properties. But the problem is 90% of the businesses in LA are small businesses. They can't afford to do that.
Yep.
And they get one smash and grab. That could be their monthly profit. So what's happening, I think, in Southern California, LA, is the responsibility to keep people safe is getting pushed to the private sector because we have a shortage of cops and we have a shortage of, again, elected officials, I think, that are actually dedicated to making sure that our communities are safe. And we're picking that up, and that's not good business. We're smart for the community long term.
Is that one of the biggest challenges for Southern California in general, do you think?
I think so. I think it's a big challenge for California in general.
Yeah.
And for New York, right?
Yeah.
Even though we have an ex-cop here in office, and I think a lot of people expected the crime to change on the day he came in, and it hasn't.
Yeah.
And you have a big police force, which we don't have in LA.
Is that right?
Yeah, I mean, you have almost 5 times as many cops as we do in Los Angeles.
Really? I didn't know that.
Yeah.
Okay. Very interesting stuff there. Rick Caruso, thanks so much for taking the time to join us here today. Really fascinating discussion.
We ought to do the show from the Grove.
We should do that.
You know?
Let's go.
Let's go.
Get out to the West Coast
Yep.
and really dive into the economics and businesses of California.
I think we can do that. We can get some support.
I would like to do that.
We'd love to have you.
All right, Rick, thanks so much for joining us. Rick Caruso is a founder and executive chairman of Caruso, talking about the retail business and the retail business on the outdoor malls, if you will. Quite vibrant relative to kind of what you hear from other parts of some of the retail. But retail in general has been good. The consumer's been good. The question now is just kind of going forward with the higher rates and all that type of thing. All right, looking at these markets, S&P up 0.4%, and the same thing for the NASDAQ. So how about that? We got yields up just slightly. 10-year Treasury looking at about 4.28%. Right now, let's head down to Washington, D.C. We'll get world and national news, and we'll do that with Denise Pellegrini in New York City.
Hey there, Paul. Yeah, it's been 22 years, as you've been talking about, since nearly 3,000 people were killed in the September 11 terror attacks. Memorial ceremonies for terror attack victims and families across the country, of course, and of course here in New York City and also in Washington at the Pentagon, where 184 people died in the attack that day. Family Life Chaplain Mark McCorkle giving the invocation at a flag unfurling ceremony.
The price of freedom cost many lives that served on this hollow ground. It is with that love for country we also stand today with family and friends who have lost one of our own.
And rescue workers organizations, meantime, say nearly as many first responders have died from 9/11 injuries and diseases as died in the attack on 9/11 itself. Vice President Kamala Harris in attendance here in New York City. President Biden marking 9/11 in Alaska. He's on the way back from that G20 summit and that big diplomatic trip to Vietnam. And meantime, the search for survivors continues after Friday's deadly earthquake in Mexico. President Biden says he was saddened by the loss of life. He talked briefly about the U.S. response.
We're working expeditiously to ensure American citizens in Morocco are safe, standing ready to provide any necessary assistance to the Moroccan people.
More than 2,500 people dead. The death toll in Morocco still rising. Kilauea added again. One of the most active volcanoes in Hawaii and in the world has been erupting after a 2-month hiatus on Hawaii's Big Island. A 2018 Kilauea eruption destroyed more than 700 homes, if you recall. And a new COVID booster could be out soon. The FDA expected to approve Pfizer and Moderna boosters as early as today. That's according to the New York Times. Live from the Bloomberg Interactive Brokers studio. This is Global News, 24 hours a day. I'm Denise Pellegrini.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. It's a risk-on field of markets this morning. Consumer discretionary, the best performing industry group in the S&P 500 right now. That's where you're going to find shares of Tesla. It is up about 6%. They had an upgrade by Morgan Stanley. Biggest drag, that's information technology. NVIDIA shares down over 2% right now. Meantime, you just heard economist Dennis Gartman. He says he can't find too much that's really exciting in these markets.
It's been a month and a half since we've seen highs in the Dow and the S&P and the NASDAQ, and you're actually seeing some trend lines being broken. So I'm not optimistic as the vast majority of people seem to be. I'm rather a tad more pessimistic, not demonstrably so, just a tad more.
And deal news, J.M. Smucker agreeing to acquire Twinkies maker Hostess Brands for about $5.6 billion. S&P 500 18 points higher right now. That's up 0.4%, 44.75. The Dow Jones Industrial Average up 70 points. That's up 0.2%. The Nasdaq 100 69 points higher. That is up 0.5%. 2-year yield right now 4.99, relatively unchanged. Great Twinkie recipe.
Sure.
Dip it in hot oil, fry them.
You like a deep fried Twinkie? I don't think I've ever had one, which is weird because I love fried foods and I love Twinkies,
Well, I think you should go there.
Remember Twinkies were off the market there for a while during the bankruptcy? Well, somebody had to fix that.
They were still on the shelves, though, right? You could still find them occasionally.
Still find them. They just weren't making them.
They'll stay there forever.
Fresh. They have a shelf life of, I think, several millennium.
Exactly.
I've heard that, which is good.
They got ho-hos. They got all kinds of good stuff.
Ding-dongs.
Ding-dongs, big time. I'm not sure if there's a difference there, but they're both good. All right, let's talk about these markets here. I'm just looking at, Matt, for the S&P 500 earnings out there for the next few years. This year, 5.8% growth. Remember when that was a negative number just like an earnings cycle ago? So now the street's looking for positive earnings growth this year. Double digits kind of the next couple of years. That's got to be good for markets, I would think. But let's check in with somebody who actually does this stuff for a living, Ethan Devich. He's a chief investment officer for Moneta Group. So, Ethan, again, we're getting ready to gear up in another month and a half for another earnings season. But just coming out of the earnings season we completed, the earnings picture came in a little bit better. I'm wondering, is there any earnings risk left in this market, or is that something I can kind of put off to the side?
I don't see a lot of earnings risk because primarily we've seen that great telegraphing of earnings. And in general, even though earnings were down in the last cycle, they still beat expectations. Markets were really forgiving. But also it looks like this time around, they're actually going to be slightly up. We don't know if that means markets are going to be forgiving or it's going to have the inverse effect. But I do think expectations are what matter, and beating expectations, that's usually good news.
So what are your expectations? I mean, do we no longer bank on a recession in the next year?
No, recession is now, I would say, fairly safely off the table for the rest of this year. We've seen all of the pundits rein in their expectations. Some of them have been contrite about it. Some of them have saying, well, they never really thought it was going to be a deep recession anyway. But it looks like just with this resilience of the consumer, the seemingly unbreakable economy, not even a financial institutions crisis can deter this economy, not the steepest rate rise cycle almost in history can deter the economy, nor the persistent high levels of inflation. And the consumer is buoyant, they have money on the sidelines, and they're feeling good. So I would find it very difficult to find something that will take us into recession by the end of this year. Maybe next year there will be some cracks starting to form, but that's the picture, that's the buoyancy. And then we're going to see how the earnings are received. And there's been caution in earnings statements now for the past 18 months. Caution will still be there. We'll be very uncautious, I think, or imprudent to take out the caution.
Right.
But the consumer looks robust.
All right, Ethan, with that background, what sectors should I be looking at? You won't be surprised to know that I missed out on the Magnificent Seven yet again. So where should I be looking here if I have taken the recession off the table?
Well, first of all, I wouldn't be selling the Magnificent Seven right now. I do think that those have some way yet to run. They're seeing, remember that muscle memory as to where the investors have made money in the past. They're going to think that's where they always make money. So I would still stay exposed there. I wouldn't be underweighting tech. But I do think that this is now the time that some of those laggard sectors can pick up some of that steam. let's look around the world. We've seen Europe, we've seen looking at UK. Europe has a lot of older economy sectors that have actually still been doing quite well. They've been overlooked perhaps in the US, but I'd be looking at things like healthcare, infrastructure. Still stay wary of financials given where we are in the rate cycle and some of that overhang of the pressure that was there at the beginning of the year on the regional banks.
You have no exposure to the Magnificent Seven, Paul?
Well, I don't think. Well, it's somewhere in some ETFs and mutual funds, maybe, but at some point. But you know me. I'm just long New Jersey municipal bonds. Yeah. All right, Ethan, talk to us about Europe here. I feel like things are, obviously improving here, stabilized here in the U.S. I don't have that confidence in Europe. How do you guys kind of think about that?
Yeah, Europe, obviously, it's a large part of our global exposure would be developed markets. And it has been a little disappointing, honestly, because we've looked at them weather the storm quite well in terms of the energy price crisis in Ukraine. We've seen some sort of strong underpinnings of inflation coming down in many areas. We looked at Spain, for an example. We do, of course, see those recessionary technical indicators in areas such as Germany. Overall, it hasn't been bad year to date. It has lagged the US, that's mainstream continental Europe. Hasn't been bad, but probably hasn't delivered upon its promise. Do we think it still can? Well, now that we're coming into the winter, we still have some saber rattling in the Ukraine. We don't know how the inventories of fuel are going to bear up now for the rest of the year. So there's still a little bit of uncertainty around how this is going to affect Europe. The UK has been very much lagging the continental Europe over the course of year to date. The economy there is the stock market's only flat. The economy has a lot of headwinds. So that, remember, was a major linchpin of the European exposure. So now that is also looking somewhat impaired. So I'd say in Europe, it's going to be stock by stock. We will be looking at some of those larger stocks that perhaps have a real multinational story to them.
In terms of the dollar, we had a big drop in the Bloomberg Dollar Index today. But I guess if you don't expect a recession anytime soon, you don't expect the Fed to cut anytime soon, you see, I guess, dollar strength continuing, or at least to hold?
I do, and the funny part is the dollar was strengthening even when it looked like the Fed would pause and the other central banks would continue to rise, which should normally be a reason for the dollar to lose. I think the dollar is as strong as it is, primarily because it's seen as a barometer of the U.S. economy and its strength and its relative strength. So even if the dollar is still hovering at these 20-year highs, it's still a relatively strong picture. Remember, it's the only economy that is powered by tech and AI. Not any other economies don't have that driver. So as long as the tech and all eyes of the market are focused on that segment, that's where I think we're going to see a strong underpinning for the dollar. All of the talk of de-dollarization, that has disappeared. We're looking at re-dollarization, or just the fact that the dollar may even be extended to other economies. And we're seeing a little bit of that in Latin America. So I don't see the dollar weakening. Perhaps it should on a technical standpoint, and it will eventually, but not in the near term.
Can you take, the experience that we witnessed during the internet sort of revolution of the early 2000s, late 90s, early 2000s, and make comparisons with, what we're expecting from AI in terms of how the US develops the technology and how Europe develops the technology?
Absolutely. There's a first mover advantage in the US. Let's not forget, in the original Internet 1.0, we did have a lot of failures. We had some false starts. We had a lot of money made and lost. And there will no doubt be some false starts and some over-exuberance this time around as well. But it's a good comparison that you make, because this is no doubt a transformational change that's coming about, and that will change how we do business going forward. So we don't quite know how large perhaps it's going to be. We will no doubt undershoot in some areas, overshoot in others. But Europe did not stay behind forever. Clearly, they were able to participate. There were some very large innovators. We saw many of them being gobbled up by U.S. competitors. But Europe will participate in this and in real time. But that's not where the focus is right now. The focus is on the early adopters, the first movers.
Ethan, when's your next marathon and where?
Actually, I slipped in an extra one that was off schedule. It's in Columbus, Ohio, in the middle of the month. A beautiful part of the country, Columbus, Ohio. Can't wait to go there with my kids, check out some of the zoo and the science museum. I don't know what I've done that. It's right a month before my Philadelphia one, but we'll see what happens.
Well, it's flat, right? Isn't Columbus, Ohio flat?
It's fairly flat.
Good,
yeah.
all right.
But
good.
It is a beautiful part of the country. I recommend you go to German Village and have a few beers after you're done. What a great place to be.
All right, Ethan, thank you so much for joining us. Ethan Devitt, Chief Investment Officer of Moneta Group, giving us her market call. Let's go to Lisa Mateo right now for some company news.
You got it, Paul. Talk about a sweet deal. Twinkies owner Hostess Brands will be acquired by J.M. Smucker for about $5.6 billion. Bloomberg's Isabel Lee has that report.
Investors will get $34.25 for each Hostess share, and that's a 22% premium from Friday's close. And shares of Hostess have surged more than 26% since before August 25. Bloomberg Intelligence says this acquisition may revive growth in the consumer division, and bakery goods have soared during the pandemic, and Hostess holds around 19% of that market share. As for Smuckers, it's fallen around some 11% year to date.
Now, shares of J.M. Smucker right now, they are down about just over 7%. Hostess shares right now up more than 18%. Tesla's Dojo supercomputer may add hundreds of billions of dollars to the company's market value through faster adoption of robotaxis and network services. That's according to analysts at Morgan Stanley. We have more from Bloomberg, Simone Foxman.
Supercomputer Dojo is being designed to essentially allow massive amounts of data during training processes to be processed by Tesla. And analysts at Morgan Stanley saying it could be worth as much as $500 billion to the company's market value. The Morgan Stanley analyst also writing that it could put Tesla at an asymmetric advantage in a market that's potentially worth $10 trillion.
And Tesla shares right now, they are up about 7%. Vietnam Airlines has signed a $7.8 billion deal to buy Boeing 737 MAX jets to replace many of its older generation Airbus planes. Now, that agreement took place during President Biden's visit to the nation. The White House said it will support more than 30,000 American jobs. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube.com. We just finished up a fantastic U.S. Open here in New York City. Molly Smith is our expert on all of this stuff, tennis. Molly, I asked him before we went on the air, on a scale of 1 to 10, how was this U.S. Open out at Flushing?
I mean, for me personally, it was my best ever.
Okay.
I've been going for like over 20 years. I went over 5 times this tournament and was very much tuned in when I was not on the grounds. And I think for me, the tournament gets better each year. In some ways, like, it is frustrating that like the crowds have gotten so much bigger, and like the U.S. Open likes to tout that as why it's such a great event. They had almost 1 million people come in over the course of 3 weeks, which is record-breaking in so many ways.
But it's also awful in so many ways.
Right, exactly. Like if you're, I'm being among those people, like, you used to be able to walk in the first week and so easily go around the grounds, walk up courtside to watch these people on the outer courts, and now there are lines everywhere.
Yeah.
So
I still had a good experience. Yeah. I go the first Tuesday. That's kind of my go-to time. Yeah. All right. So the big weekend here, we had Djokovic win the men yesterday, and then
which is historic.
It's historic. So what I was saying is, I'm a big sports talk radio listener, and it was all about the Giants and the NFL this weekend. But what did get a little bit of airwaves was Coco Gauff on Saturday.
Coco Gauff.
Coco Gauff. Thank you.
The host because
the hosts were saying, "Wow, that was really compelling." I watched that. Whereas yesterday, Djokovic, who's great and arguably the best ever, he wins in three sets. What's your take on the finals?
So yeah, I think, look, I'm a little biased here. I did write a story going into the U.S. Open about why women's tennis is more fun and unpredictable than ever right now. So maybe this is a little self-serving, but we did know after the first week of play that we were guaranteed to have a new U.S. Open champion for the 9th time in 10 years. And that's pretty amazing on the women's side. So Coco, this is now she's now the youngest American teenager since Serena to win the U.S. Open, and of course saw what a career that turned out to be. And Coco has had an incredible summer. She won several big tournaments leading up to the Open, and now culminating in this. Like, she really has she wowed everybody. So like, massive congrats to her. It was incredible and well deserved. And then for the men's, I think a lot of people honestly lost interest after seeing that Alcaraz lost in the semis, and like, I don't really need to see Djokovic and Medvedev. Like, a lot of people don't like their personalities. I personally think they're both pretty funny and candid people, but to each their own. And it was kind of like a bit predicted in that way that Djokovic would win. Maybe one set of the 3 was really interesting, but also a very historic win for him as well.
I guess in terms of watching, I watch mostly MotoGP, so it's exciting when someone other than, a Marc Marquez or a Valentino Rossi wins. It's great. But the problem is next year they don't win. In fact, next year they don't have a great season at all. So to me, it's more interesting over the long term when someone who's 36 years old wins a 24th Grand Slam. Someone who's 19, of course they're going to win. They're 19. Someone who's 36, that's a little bit more difficult. To me, it's crazy that someone who's 36 years old is too boring because he always wins,
Yeah, but that's tennis for you. People have seen this playbook over and over again, and, they look at the head-to-head between Djokovic and Medvedev, who Medvedev did beat him in the finals here 2 years ago, but like, whatever, like, Djokovic is like going to be the easy favorite in this one. I think the women's had a lot more element of suspense to it. And of course, when there's an American in the final and you're in, America, this is like a really big deal, especially in the New York area here. Yeah. Like, I have so many friends that don't care about tennis the other 50 weeks of the year, but man, they were so dialed in this weekend because of Coco.
20 seconds. Can Coco go up to that next level? Because it seems like she's really smart, really well-spoken, great family, all that kind of stuff.
All the things, yeah. And I think that's the scariest part, is that she's very much still improving. So, and she just added a new coaching team over the summer that helped her get to these heights. So I'm expecting more great things out of her.
All right, Molly, thanks so much for joining us. Appreciate your reporting throughout the tournament. Resident expert here, and it was a great tournament, great couple of weeks out in Flushing. I was out there, had a great time. I had a great experience. I got my, what's the drink? The
Liquid Death?
Honeydews. No, the honey deuce.
I see.
Yeah, so that was kind of the highlight there. So, well, more coming up. This is Bloomberg. Good morning.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to take a look at the auto business, Matt. That story you're referencing before, Monica Raymond, autos industry disruption reporter with Bloomberg News. She joins to discuss today's big take story entitled, Germany Frets Volkswagen is heading down the road to nowhere.
I wonder if it's a Talking Heads reference, or I wonder if Monica was thinking more along the lines of Ozzy Osbourne.
Okay, we'll ask her.
Because both of them have a song.
We will ask her. We'll talk about Volkswagen and the EV biz. Jessica Rabe, founder of Data Trek Research, joins to talk her comparison between skydiving and investing and in other investing strategies. No idea where that's going to go, how that's going to go.
Dude, that's awesome, though.
But we're going to
Data Trek is amazing. She's partners with Nick Colas, to write
Nick
those
Colas
newsletters.
is crazy smart. And
yeah.
You're a skydiver, dude. You did
I love skydiving as well.
No surprise there, John Tucker. No surprise. Let's go to somebody who I know has never skydived, John Tucker.
No, jump out of a perfectly good airplane? I don't think so. Stock indexes higher. Technology stocks leading the broader market higher. You have Tesla shares right now, most active, up 7.1%, jumping after Morgan Stanley upgraded the stock, basing most of their optimism on their machine learning supercomputer. Apple introducing its iPhone 15 lineup tomorrow. They're looking to snap several straight quarters of sluggish sales. And ahead of the Consumer Price Index on Wednesday, Invesco's global market strategist Christina Hooper says, you know what, Fed policy, it is working.
Well, the last mile is going to be hard, but I do believe that we are very much on that disinflationary trend. Not every data point is going to support that narrative, but that will be the case.
Well, blue chip firms rushing to raise fresh capital. T-Mobile tapping the investment-grade bond market today. So they have a 30-year security, among others, that could yield almost 2 percentage points above treasuries. And then finally, Disney and Charter Communications reaching an agreement. It's going to restore channels including ESPN and ABC to the cable operators. 15 million subscribers. That's according to the Journal. S&P 500 right now up 14 points. That's a rise of 0.3%. 4470 on the index. The Dow Jones Industrial Average up 44 points. The NASDAQ 100 66 points higher. That is up 0.4%.
John, do you know why the Disney Charter deal got done today?
No, tell me why.
Monday Night Football tonight.
Oh, and who's playing Monday Night Football?
Who cares?
Tonight?
But there's going to be a game. It's going to be huge ratings. ESPN and ABC and Charter, they got to get this. The Jets are tonight. That's right.
40-0 loss. So
you're still mourning the All right.
Goodness gracious, the Giants. It's a rebuilding year, Jess.
It's not a rebuilding year. It's just one bad week.
John Tucker.
John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're streaming that live thing on YouTube.com. So just go there and search Bloomberg Radio. And that's
now,
where
hang on
you'll
a
find
second.
us.
You grew up in the area. So are you a Jets fan or a Giants? You're a Giants fan.
Giants and Yankees.
And
the way it works, here's the way it works.
Yeah.
If you're a Giants fan, you are also a Yankees fan.
Usually.
In part because the Giants used to play at Yankee Stadium years ago. Many, many moons ago.
But I feel like...
And Jets, if you're Jets, you're also a Mets fan.
But
the Giants fans look down on the Jets fans because they think they're not as...
Right, it's kind of an underdog
classy.
thing, right? If you like the Mets, then you're not rooting for the most popular team in all of baseball. If you like the Jets, then you're not rooting for the Giants, which all the, like the good-looking, athletic homecoming kings root for. And I feel like you might even drink Pepsi instead of Coke, right? So it's kind of choosing the...
Well, the big thing is, when you have children, do you raise them as... How do you raise them? I mean, if you're a Met and Jet fan, do you make them go through the same misery that you've experienced your entire life? Literally, those are the conversations to have.
Absolutely.
Exactly.
Misery loves company.
I've grown up a Cowboys fan, because when I was a kid, that was...
That's the worst. That is just
I'm from Texas, but I'm not a Cowboys fan.
That's just the worst. I can understand it because that was a certain generation. But all right, let's move on. We got some green on the screen. Help us out, Jess Metten. She joins us. She's from somewhere like Galveston or Corpus Christi, Texas. Corpus Christi, Texas.
Christi. Unfortunately, my Texas A&M Aggies lost.
Yeah, but that was and you go into the Miami Stadium, it's not even full. It's kind of weird because it's a small school.
They don't care.
And the students are all over the place. Crazy. Anyway, what do you got for us, Jess, on these markets?
Well, I was going to talk about, because one of your strategists over at Bloomberg Intelligence, Diana Rosero Pena, was taking a look at what's going on with J.M. Smucker and obviously Twink Hostess that we did know earlier. Just with a few weeks ago, Reuters had reported about how the company was exploring a sale. So obviously we did get that news this morning. So peanut butter and jelly maker J.M. Smucker, if you're looking at that stock, ticker symbol SJM, it's actually down close to 7%. So it's on pace for its worst day since May 18th. But it did agree to acquire Hostess Brands for about $5.6 billion. So that does include about $900 billion in debt. So the difference there, because if you look over what's happening actually with Hostess's stock, it's up about 19%. So the ticker symbol on that is Twink. So it would be its best day, obviously, since August 25th.
It's
but
rough.
The price.
It's a rough ticker.
When you are.
I think I'd rather have Dong.
Wait, what?
I mean,
no, we're good. Next.
By the way, they make the pre-made peanut butter and jelly sandwiches, the Crustable. How lame do you have to be to have to go out and buy?
I can't bring myself to make
sandwich?
a peanut butter and jelly myself.
Oh my goodness, so much sass towards
But
all
guess
of these.
guess where J.M. Smucker Company is based, Matt?
Oh, is it Ohio?
Orville, Ohio.
Wow.
Yeah.
There you go.
Wow.
$13 billion market cap.
Named for one of the Wright brothers, I would guess.
I don't know.
That's my guess.
Mark T. Smucker is the chairman,
For
president,
me,
and CEO.
I mean, to me, there is no better peanut butter in the world than Jif peanut butter. I mean, by a long shot, it's better than Skippy.
No, I'm Skippy.
In my opinion.
I'm Skippy.
Interesting. A little house divided there between the two of you. I'm not surprised, though, but I don't know. I feel like I like them both. I'm simple with those kinds of things. But the price tag was actually higher. So Wall Street Journal over the weekend had reported that the deal would be in the neighborhood of about $4 billion. So the price deal did come a little bit ahead of that. So that's why you are seeing a little bit of a difference there between how both of those stocks are performing this morning. But Hostess Brands has been through 2 Chapter 11 bankruptcies. And so when it did return to public markets back in November of 2016, I know that Matt always likes to use the comp function for that one, but you do see it up. Let's see here. I think it's something like more than 200% since that point. But big of a difference there. But
that's a big premium they're paying.
Yeah, Gina Martin Adams was actually on surveillance this morning, and so Tom Keene had asked her the AI question because I'm sure did y'all see that too?
Actually, she volunteered it. He didn't even ask. He just said, what's the outlook for this company if you already think it's going to have decent earnings? Like, why do they beat? And she said it depends on how well they are implementing their AI strategy. And I thought it was one of the fascinating conversations of the morning because I had never considered the fact that AI would matter that much to, Hostess or
types of companies
James
like that.
Smucker, those brands. And she said it's huge in terms of getting the kind of intelligence that you need about your consumers and boosting sales.
Yeah, and basically just really trying to understand your client base better and how to access the market faster. So she was really talking about how brand-centric that could be a potentially huge upside when it comes to that. And then Diana Rosero Pena over at Bloomberg Intelligence.
She's coming on later?
I hope so. She's really great. She does have a research note that she did put out about this earlier. And so she was taking a look at how bakery snacks have been seeing those outside sales growth, not surprisingly since the pandemic, up about 14% in the past year when you are looking at what's going on between Hostess. And Hostess has about 19% of the market, though the loss in share in the past couple of years could potentially cause concern. But she is seeing on Smucker's, when it comes to pet and coffee units, those could potentially fuel sales, even when you are looking over at maybe more of its consumer-oriented segments.
All right, good stuff. Jess Metten, thanks so much for joining us. Jess Metten covers the equity markets for us. We appreciate her coming in here, breaking down the M&A deals for us. Good stuff there. Big take story right down Matt's alley here. Monica Raymond joins us. She's the auto industry disruption reporter. How about that with Bloomberg News? She's got the story out there entitled, Germany Frets Volkswagen is heading down the road to nowhere.
Yeah.
So, Monica, thanks so much for joining us via Zoom here. What's kind of the thesis of your story? I thought Volkswagen's going all in EV.
Oh, definitely. I wouldn't say that they're not focused on their EV strategy, but really what the concern is that Volkswagen is sort of atrophying market share in China when it comes to EVs, when it comes to competing with Tesla, when it comes to competing with BYD. And basically the company needs to sort of catch up and redo their strategy and figure out how to deliver to the Chinese market what the Chinese have come to expect. It's a unique situation because basically during the pandemic, when everyone was sort of triaging their own issues back at home, China really went all in with EVs, with their infrastructure, with supporting their startups there, and the scene completely changed. They made leaps and bounds when it came to software technology, when it came to infotainment, when it came to in-car experiences. And now Volkswagen and other legacy car makers are looking at the market and realizing, the Chinese are doing it really, really well when it comes to EVs, and they have to sort of find a way to catch up. And the bigger picture is that this is a big concern for Germany because the auto industry plays such a huge role in the macro environment and the economy. And if Volkswagen fails to get this right, it's going to have an impact on their domestic situation, on the domestic economy.
I think it's an amazing story on so many levels, Monica. The first thing that I was wondering about is, did Herbert Diess leave Volkswagen in this situation, or is Bluma, not executing on the Diess strategy well enough? Then I also thought about, if this is a security issue for Germany as well as an economic issue, how much control does the state feel like it can take over this behemoth? Because if things go wrong, it's not just for the Porsche Piech family a problem, it's a problem for the entire country and economy. So I think there's so many different threads that are fascinating. What happened to the tens of billions of dollars that Diess was investing in becoming an EV maker, becoming a software company? I remember headlines out from Rauvald that were like $30 billion or $50 billion. Are they spending that money? Is it getting them anywhere?
Yeah, absolutely. Great questions all around. On the investment question,
sorry, I just thought the story moved me. Honestly, I really, really think it's fantastic. I recommend to our listeners and viewers to check it out. It blew me away this morning, so I should have read it last night. I wouldn't have been able to sleep if I did. All right, so the money.
Right. So on the money part, no, and the money is still there. Volkswagen is investing, I think, total over the next 5 years, something like 180 billion, and 2/3 of that is going to EVs. Don't quote me on that. The numbers are a bit fuzzy in my head.
It's a lot,
but there's still, it's a lot, yeah. And you're absolutely right. Diess was, in my mind and in my assessment, totally the innovator. He had the long-term vision for where the car industry was going and where it needed to go, where Volkswagen needed to go if it really wanted to compete with Tesla, and eventually the Chinese. And one of his big strategic plans or moves was this idea of vertical integration. We got to get control of the battery supply chain, and that was why he really went all in with PowerCo, creating their own battery company. He thought, we have to go in all in on software. We have to create our own software unit. We have to control that as well in order to control the profit pools that subsequently come from in-car entertainment. And so he was all about sort of focusing on what Volkswagen could do on its own, making Volkswagen into sort of more of a tech company as, the car becomes more of a sort of a living room on wheels, or sort of more like a mobile phone on wheels, that people's customer expectations have sort of moved in the direction of smartphone apps and services, and you needed to be able to offer that in car. And so his strategy was, well, let's do it on our own so we can control more of the profit pools. And that maybe turned out to be sort of the Achilles heel of Diess, in addition to his management style. But I would say there's a big difference. There's a difference between Diess and Bluma in that Diess, you're right, Diess did bring a lot of these innovative projects into the company, and Bluma is now sort of carrying those forward and bringing those along. And I would say, Bluma has totally, Oliver Bluma, the new CEO, who is also currently the CEO of Porsche, he is really he's going all in with the battery strategy. He's still supporting Cariad, the software unit, and saying we're still gonna, back Cariad's efforts 100% to create the premium platform for the Audi and Porsche vehicles, for the e-Macan, for the Q6 e-tron, and then using the company's resources to broaden their offering for electric vehicles.
I feel like they're slow to catch up, and they can't really knock the ball out of the park when it comes to range. They don't do as well as GM has 450 miles of range in their EV pickup trucks. Now they have gigantic batteries to support that, 210 kilowatt packs, but still they have it, right? And it doesn't seem like Porsche should only have one EV model out at this stage in the game. Why don't they already have an e-Macan? Why don't they already have an E version of the 911? Like, what is taking them so long?
Yeah, it's definitely the software issue. So by creating, by having a legacy car maker that really knows German engineering really well, to have them pivot and suddenly start doing software, it's a completely different process. It's a completely different ball game. It's a completely different sport. And they had to sort of learn from zero how to do it, how the processes work, how you develop software. And that led to, delays when it came to the launch of the platform that the e-Macan is going to be based on. It was supposed to be out, I think, about 2 years ago already, and that was one of the things. Audi and Porsche, these models that are coming out for Audi and Porsche, these electric models, the models that are going to come from between 2024 and 2028 are supposed to make up about 50% of Volkswagen revenues in that time period. So they're, if they don't
That's
get
amazing,
that premium
considering
platform
they have like
out,
11 or 12 brands, right?
Yeah, exactly. No, I mean, Audi and Porsche are really the big money makers. I mean, Porsche is no longer technically a cash cow since the IPO. They're no longer sharing their profits with Volkswagen. But for Audi, it's really key. It's really critical that they get this platform, this premium platform from Cariad out to build their model lineup. And they haven't been able to do that because of the delays. Basically, it was a struggle for Cariad, for the software unit, because they've had to do one software platform for the Volkswagen, this other premium platform for Audi and Porsche, and then they also had this SSP platform, this scalable, unified platform for all the brands. That's sort of the long-time vision that Diess had, and that's sort of up in the air at this point about if and when that's going to come to fruition.
Hey, Monica, thanks so much for joining us. Really appreciate getting some of your time. As Matt mentioned, a fantastic piece of work there. Monica Raymond, Autos Industry Disruption Reporter for Bloomberg News, out with a big take story today on the Bloomberg terminal entitled "Germany Frets. Volkswagen is heading down the road to nowhere." So check that out on the terminal or Bloomberg.com/big take. Those are our really deeply reported stories. Great stuff. Highly recommended. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. The Wall Street Journal reports Disney and Charter have reached a deal that will restore popular channels, including ESPN and ABC, to the cable operator's nearly 15 million subscribers. Now, this comes hours before the first Monday Night Football. The NFL season is set to air on ESPN. The blackout has lasted more than a week. Right now, shares of Disney are up about 1.5%. Charter Communications shares up nearly 2%. But Charter wasn't the only provider upsetting football fans.
Comcast's Xfinity reported outages yesterday, sparking anger among customers eager to watch NFL games. According to downdetector.com, customers flooded Xfinity's support on X, formerly known as Twitter, with complaints about not being able to access NFL programming.
And that was Bloomberg's Gina Cervetti reporting. Well, just months after completing its takeover of rival Credit Suisse, UBS is set to cut hundreds of wealth jobs in Asia as activity slows. Switzerland's largest bank has reduced some overlapping roles in the past months, and sources tell Bloomberg that further cuts are expected through November. And many of the layoffs will include relationship managers in Hong Kong and Singapore. Shares of UBS right now, they're up just a fraction. And Moderna has found a new use for its mRNA technology. The COVID vaccine maker has agreed to pay German biotechnology company Immatics as much as $1.8 billion in a multi-year collaboration on developing cancer therapies. Now, Moderna will pay Immatics $120 million up front and the rest of the work after it hits certain goals. Shares of Moderna right now, they are down 2%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Traders awaiting the economic readings that are going to help shape Wall Street's view on how close the Fed is from wrapping up its cycle of interest rate hikes. On Wednesday, we're going to get the Consumer Price Index. Now, ahead of that, U.S. consumers' inflation expectations mostly stable in August. The New York Fed says median one-year ahead inflation expectations rose slightly last month. S&P 500 coming off session highs right now, trading below 4,500. Tesla rallying as Morgan Stanley upgraded the company, and then you have Qualcomm climbing after Apple extended a deal with the chip maker. S&P 500 up 15. The Dow Jones Industrial Average 32 points higher. The Nasdaq Composite Index right now is up 86. Nasdaq 100 86 points higher. This hurricane out in the Atlantic was a nasty one.
Yeah.
I believe it sets the record as the first one to have achieved Category 5 status so early in its formation. It's since weakened somewhat, but it may re-strengthen. Right now, the forecasters say it could take aim at Cape Cod in Massachusetts by next Saturday.
Okay. All right, we'll keep an eye on that one. That's not good for our friends up there. Probably create some big surf off the eastern coast, so we can.
Can we say Jersey Shore?
I'm saying
Make
Jersey
a reference.
Shore. Yeah, I'm all in. Literally. All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're doing a streaming thing on YouTube, so head over to youtube.com, search Bloomberg Radio. Here's a great saying I just saw for the first time. There are old skydivers and bold skydivers, but there are no old, bold skydivers. That's a good one. I guess you can apply that to investing, because certainly our next guest does that very well. Jessica Rabe joins us. She's a founder of Data Trek Research. We love the folks at Data Trek. Lots of really smart research comes out of there.
Now, you said Rabe, and I would think it's Raba.
I went Rabe.
Let's hear
Jessica,
it from
what say you?
Jessica.
Ray, you're correct. Thank you so much for having me, Matt. I'm very excited to be on.
All right, Jessica, I like how you kind of bring together the skydiving thing, which, by the way, we have to talk about that at some point. Who does that willingly? And investing. So how do you bring the two together?
Sure, yeah. So to me, skydiving is an amplified version of life and even investing, in that it's a masterclass in risk management. So like you said at the top, the saying there in skydiving is a very common one. There are old skydivers and bold skydivers, but there are no old, bold skydivers. So no matter anyone's experience, both skydiving and investing are process-driven disciplines with small margins for error. So ultimately, it helps teach you how to confront natural human fear and overcome it by sticking to a process, staying present, and it's very important to remain calm in high pressure situations.
All right, so
I have to say that I love skydiving, but I'm not licensed, so I still have to get strapped to a big man's back or to his chest. Unlike Jessica,
how many times have you jumped out of a plane?
I've gone 7 times.
Wow.
And Jessica, I'm guessing you've done more.
Yes, I'm still a baby in the sport, but I've done 114 solo skydives at this point.
Wow. And do you pack your own chute, or how does that all work? I'm wondering.
Yep, that's part of getting licensed. You have to know how to pack your own parachute, and quite frankly, you want to know your own equipment, and you want to know how to pack, because then the way that your canopy opens is more reliable, and you trust yourself.
I was struck. I read your note as soon as I saw it hit my inbox, and I thought it was really cool, the parallels between investing and skydiving that I'd never thought of. The only difference for me, and probably for most people listening in terms of retail investing, is I don't pack my own chute in the markets, right? I don't even have the ability to know how to do that. I need to leave it to people like you and Nick to pack my chute for me, because I just don't have the time to do the research, if you know what I mean.
Yeah, sure, absolutely. And yeah, I mean, so there's so many parallels between investing and skydiving for really all levels of experience. So, one of those is just sticking to a process. There are fundamentals in skydiving that keep you safe, whether it be checking your gear, remaining altitude aware or knowing how to fly and land in different conditions. So you can do most of a skydive right, but make one wrong move in the last 200 feet or so and face serious consequences. The same is when it comes to investing. Stray from core guidelines from idea generation to taking profits or losses, and any type of investor, from a novice to a 20-year veteran, can pay the price.
All right, so I like this one. Anticipate other participants. So I guess in skydiving, you got to have that situational awareness to know what's around you, but I guess that kind of makes sense in investing as well.
Oh, yeah. So I can do everything right on a jump, but get hurt by another skydiver, whether that be colliding under free fall or under canopy. So you really have to prepare not just for yourself, but you have to anticipate other people. It's just like riding a motorcycle, which I also do. You constantly have to have your head on a swivel, and that's much of investing too, is anticipating not just what you're going to do, but what other market participants are going to do, especially when it comes to how they respond during crises. That's how a lot of volatility is created, is by other market participants and how they respond under pressure.
Yeah, I would argue in motorcycling, motorcycling on the highway or in public roads, paying attention to what other people are doing is far more important than paying attention to, I'm not going to make many mistakes. The motorcycle stays up by itself as long as, I'm putting in the right inputs. So the most important thing is watch out for that car or
You're
truck.
not one of those crazy people on the Garden State Parkway that zoom in and out of cars doing like 100, 120 miles an hour?
I try not to. Jessica,
Jessica's laughing over there.
That's like a bold skydiver, right? Those people don't last very long.
You don't want to be too bold, and that's why motorcycle riding too is a perfect example. Whether it be skydiving or motorcycle riding or investing, is you have to plan for adverse events. There are certain forces out of our control, whether it be weather or other skydivers and skydiving, or economic and geopolitical shocks in investing. The best we can do is stay aware of the risks and plan for them. I see skydivers with thousands of jumps still practicing their emergency procedures in the plane ride up to altitude. So that way, muscle memory kicks in should they need to cut away their main parachute and deploy their reserve parachute in the event of an equipment malfunction. And that's the same with investing. People know at DataTrek we have a long-standing recommendation to add risk exposure when the VIX gets to 28, 36, and 44, because these are 1, 2, and 3 standard deviations above the long run mean, and therefore signal excessive investor fear. So yeah, investing, skydiving, motorcycle riding, you always have to be on your toes and be ready for anything.
All right, so I'm looking at some of the photographs you've attached to your note here, and they're making my stomach literally queasy as I look at them. What's the highest altitude that you've done a jump from?
So I jump at Skydive Sussex, and the nice thing about that drop zone is they go all the way up to 14,500 feet.
Yeah, is that you hanging off like a helicopter or a plane or something like that?
Yeah, I did my first few helicopter jumps a few weekends ago, so that was certainly very, very fun.
That is crazy.
Because the jumping out of a helicopter is different than a plane. With a plane, you have all the relative wind coming at you. With a helicopter, you jump into dead air.
Jesus,
that sounds like fun.
Yeah.
Now, I was wondering if you make these parallels. With skydiving, you want to be pretty conservative, and in investing, you do have a little bit of a risk tolerance, right? So, how do you limit yourself, or how do you stop yourself from just buying 10-year treasuries right now?
Yeah, I would say that you have to, in both skydiving and investing, you have to assess your abilities honestly. So in skydiving, it's very important to know your skill level and also stay within your personal risk tolerance. So that means only jumping in winds or joining group formation skydives that you believe that you're confident enough to be able to land safely, or also confident in others' abilities that you can execute the skydiving plan safely. There's a saying in skydiving: it's better to be on the ground wishing you were in the sky than be in the sky wishing you were on the ground. And that's a big part of the job for investors or financial advisors. It's just doing what will keep your clients in the game by knowing your own limits or your clients' limits. Just because you can doesn't mean you should. And virtual currencies are a great example that many people learned that hard lesson over the past 2 years.
So
virtual currencies.
So what's the next step for you in terms of skydiving?
There's so many disciplines in the sport, so there's just always ways to constantly improve and learn something new. So yeah, a lot of people wonder, they think skydiving's crazy. What's the appeal? And I'd say there are 3 main appeals to skydiving, at least for myself. Number 1, I like pastimes that push limits and require mental focus. So skydiving obviously fits that description, as does motorcycle riding, as we discussed. The other thing about skydiving is it's a really wonderful, diverse, and welcoming community. I have friends in the sport from all walks of life. One's a famous rapper. The helicopter jump that you referenced, I did my first helicopter jump with the rapper Redman, so that was super fun. Other people are computer coders, to helicopter pilots. I've met a bunch of cool women in the sport, and we all connect around a common passion.
All right. Well,
and thirdly, it allows me to be present and take a fun break from the grind of Wall Street as much as I love it. So,
all right.
In portfolio construction terms, I'd say it's my uncorrelated asset with high returns on investment.
Very nice. I'll let you go with that. Jessica Rabe, founder, Data Trek Research. Appreciate getting some of your time with our news in New York City. Here's Denise Pellegrini.
Hey there. Yeah, it has been 22 years, as you know, since nearly 3,000 people were killed on September 11 in the terror attacks at the memorial in Lower Manhattan, where the World Trade Center once stood. Names of the victims read aloud, the loved ones reading off those names, also giving some really emotional tributes to those who were lost.
And my uncle, Matthew J. Burke. The life you lived and the memories you left behind will be forever cherished. Family members are like stars. You don't always see them, but you always know they're there. God bless you, Uncle Matt, and God bless America.
Yeah, and along with victims' families, Vice President Kamala Harris in attendance there, along with current New York Mayor Eric Adams, former mayors Michael Bloomberg, founder and majority owner, of course, of Bloomberg LP, and Rudy Giuliani. Both senators from New York also were there, and New York Governor Kathy Hochul. Hurricane Lee has grown back into a Category 3 storm with 120-mile-per-hour winds. It's about 650 miles south-southeast of Bermuda now, forecast to get stronger. Bloomberg meteorologist Rob Carolyn tells us at this point, though, there's no need for much of the East Coast to hunker down.
Best estimate is track keeps the system to the east of the East Coast and the east of New England late in the week, but we'll certainly pay attention to it since it's a strong storm system. Anytime they get in the southwestern Atlantic, we want to make absolutely sure we know where they're headed before we give folks the all clear. All right, Bloomberg meteorologist Rob Carolyn there. The death toll from the quake in Morocco continues to rise. In Hawaii, Kilauea on the Big Island erupting again after a 2-month hiatus for the volcano. North Korea and Russian officials confirming North Korea's leader Kim Jong-un will visit Russia. They'll talk about arms for Russia from North Korea. And the new COVID booster could be out soon. The FDA expected to approve Pfizer and Moderna boosters as early as today. Live from the Bloomberg Interactive Brokers studio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit Commonwealth.com to learn more. The major stock averages are higher. S&P 500 coming off the session highs, though, trading below the 4,500 mark right now. Tesla and some of the other Wall Street mega caps driving gains. Tesla was up over 8%. Amazon up over 2%. Microsoft shares, they're gaining up close to 0.9% right now. Traders also waiting for the U.S. consumer inflation data that's due on Wednesday. You do have these concerns mounting that strong energy prices could make inflation harder to tame. Meantime, Amy Silverman, head of derivative strategy at RBC Capital Markets, says the exuberance over stocks has somewhat dissipated.
I would say that has really waned from its peak to the point where that sentiment has all but evaporated on the upside, and we're really seeing that pick up in demand for downside, and that's specifically in those high momentum names like NVIDIA as well as the other Magnificent Seven.
Instacart and its backers setting the stage for an IPO that may value the grocery delivery business at as much as $9.3 billion. However, that's less than a quarter of what it was worth at the height of the pandemic. Right now, the S&P 500, 17 points higher, up 0.4%, 44.74 in the index. The Dow Jones Industrial Average up 25 points. The NASDAQ 100, 97 points higher, up 0.6%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. As always, Matt Miller, Paul Sweeney live here in a Bloomberg Interactive Broker studio. We're streaming live as well on YouTube. So just head over to youtube.com and check out Bloomberg Radio. Let's talk coal, Matt. We talk a lot about eco kind of green energy. We don't talk a lot about coal. It's got to be tough to be in the coal business in a world that's going green, but we have found someone who does that very well. Randall Atkins. He's the CEO of Ramaco Resources. Trades on the NASDAQ, METC. I get it. I get the ticker, Met Coal. He joins us live here in our Bloomberg Interactive Broker studio. Of course, the highlight of his career, obviously, graduated of the Duke University, but I finally found somebody who did it before I did. I mean, so not, just laying it there. Randall, I'm looking at your background. It's not like you're one of these people that came up in the coal business your entire life. A lot of banking, a lot of investments, a lot of finance. Why did you get into the coal business?
Got into the coal business because it was sort of a distressed business. It was a play that, frankly, we stepped back even 5 years ago. Most of the public companies were all in bankruptcy.
Yep.
So if you could start one from scratch, kind of reverse engineer it correctly with little debt and sort of maximize the asset quality, we have proven that you can make a very good go in this business. And as our expression is, we view coal in a manner which coal is too valuable to burn. So okay. we approach it a little differently than most.
So how do you address what I assume must be a shrinking market? Is it in this country? Do we use less and less coal every year?
Split the market into two different pots. One is thermal coal, and that answer to your question is yes, it is probably a declining market. Met coal, which is what we focus on, is basically a precursor to make steel. So that business is not declining, and indeed internationally, where we probably place upwards of 2/3 of our market, is growing. Obviously, the Asian market is the principal growth factor.
So 2/3 of your business is outside the U.S.?
Correct.
Okay. So talk to us about just the competitive landscape. I can't even think of other coal companies out there. Who else is out there that you compete with? Like, who is the competitive marketplace? Is it other U.S.
Billiton?
Yeah, I guess. Yeah. So what's the competitive landscape?
We wouldn't compete so much in the Australian market, which has pretty much got a lock on a lot of the Asians just because of the proximity of logistics. But domestically, we would compete with companies like Alpha, Arch, to a lesser extent, Peabody, Warrior. Those would be some of the names.
So met coal, coking coal, still desperately needed to produce all the steel that we need. What does the growth in that industry look like?
The growth in that industry is basically, I always say, met coal is a proxy for steel, steel is a proxy for GDP. So if you look at basically general economic trends, whether it's in the U.S. or overseas, it pretty well ties to, met coal ties to the growth in the general economic situation of most of the countries.
All right, so I'm looking at your financials here on the FA function on the Bloomberg terminal. I got top line going kind of mid-single digits, EBITDA margins mid-20s, free cash flow positive. What's the growth driver for your business? Do you acquire additional mines? Do you develop further what you've got? How do you grow your business?
Sure. Well, we're actually the only domestic coal company that's projecting to double in size from where we sit right now. So we have decided to grow organically without buying existing mines. We basically have taken properties where we, in essence, buy the reserve and develop that, plan it, and then market it from there. So we will jump from about 2.5 million tons last year to about 3.5 million tons of production this year, ultimately to about 6 to 7 million tons.
What do you, I mean, I look at the stock price and I wonder what happened 2 years ago. You know, all of a sudden it just goes boom on the rise at the August, September 2021 part of the chart. What happened there?
Basically, after that, you had sort of an economically decline. You had after effects of COVID, you had a different market situation. Basically, in the August and September periods is when you find almost 100% of the domestic sales occur in the U.S. So that was a tough period in domestic sales. A lot of the coal companies dropped in that same time period.
No, but you jumped. I'm looking, so 2021, your stock went from 250 to, I'm going to say 12 at the end of the year.
Right.
It was the end of the pandemic, which is why I think it's so interesting. Usually you see these stock moves right around 2020, depending on what the company is. But you climbed high into 2021, 2022, and now you're holding at about $8.
Right. Our jump is primarily based on a market recognition that we had gone from being sort of a small-time producer into becoming into the ranks of a larger producer. When we get to the 6 to 7 million ton size, we will be almost an equal size in terms of the met coal production with most of the major coal companies, which frankly still have got a predominant thermal mix. And that's frankly the drag on most coal stocks, is that there's not a market differentiation between thermal and met.
So what's the future of coal in this country, this energy? You know, I mean, is there always going to be a place for coal, or it just seems like, you know, if you talk to some of the more cleaner energy folks, they would like to see that go to zero?
Yeah. So I have been a proponent for about 10 years that, as I said, there's a higher and better use for coal. Coal is too valuable to burn. I go back to really 100 years ago when coal was used for a variety of things that had more of a chemical nature. So we have been working with the Department of Energy and some of the national labs in creating new uses for coal, where you can convert it into things like synthetic graphite, graphenes, carbon fibers. And frankly, that took us into the rare earth business, where, you know, 10 years ago, I didn't know the difference between rare coins and rare earth. But we have found that connected to coal seams. So the future of coal, I see, is having 3 legs to the stool. One for thermal production for combustion, one for steel production, and the third leg of the stool will be higher tech uses for alternative carbon products.
What are the rare earths that you're finding, and how are you doing at getting them out?
We have found a spectrum of about 14 different rare earths, and frankly, 30% of what we found are concentrated in the heavier magnetic rare earths, which are frankly the more valuable ones. Rare earths are measured in parts per million, so it's, you know, it's unlike the bulk coal business.
Yep.
It's more like you're looking for diamonds almost, and it's more of an industrial chemical business than it's a mining business, because once you find it, that's only half the battle. The trick is to separate the rare earths, right, and get them processed in a way that they then become commercially usable.
Hey, Randall, thanks so much for joining us. Really appreciate you coming in here. We don't talk about coal that often, so it's a fascinating discussion. Randall Atkins, he's the CEO of Ramaco Resources. Thank you. Symbol METC. This is Bloomberg. Let's get some company news right now. Elise Mateo.
Hey there, Paul. It could be one of the biggest initial public offerings of the year. Bloomberg's Jeff Bellinger has that report.
Instacart and its backers are looking to raise as much as $616 million and will offer 14.1 million new shares for $26 to $28 each. It could set the stage for an IPO that may value the grocery delivery business at up to $9.3 billion, less than a quarter of what it was worth at the height of the COVID-19 pandemic. The move could open the door to a rebound in U.S. listings at a time when the market for them has been choppy.
Now, meanwhile, sources tell Bloomberg ARM Holdings is considering raising the price range of its initial public offering. Bloomberg's Bailey Lipschultz tells Bloomberg Surveillance what he's watching in the near term.
So we're expected to have ARM's IPO price Wednesday after the bell.
Okay.
Debut on Thursday. Instacart as well as Klaviyo, a marketing and data automation provider, both updated their S1s. They're going to hit the road. Expectations are that they will, court investors with their bankers and look to price and debut sometime next week. We're hearing as early as Tuesday for the pricing and Wednesday for the debut for those two stocks.
Meanwhile, in other news, Vietnam Airlines has signed a $7.8 billion deal to buy 737 MAX jets to replace many of its older generation Airbus planes. The agreement took place during President Biden's visit to the nation. The White House said it will support more than 30,000 American jobs. Let's check in with shares of Boeing right now. They are down about 1%. Those are the company stories we're following this hour. We'll have more Bloomberg Markets coming up in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, S&P 500 up 0.4%, 4472. The Nasdaq up 0.6% there, so a little bit of a lift here to the market. The Dow pretty much unched on the day. 10-year Treasury yield up just slightly, looking at 4.28 on your 10-year. The 2-year just below 5% at 4.98%. We will call out WTI crude oil. It is unchanged at $87.50. Bitcoin off 2.75%. 25,100. It did dip below there. So kind of a weaker day for the cryptocurrency. Right now, with our news in New York City, here's Denise Pellegrini.
All right, Paul, thank you very much. It is 22 years today, as we've been talking about, since nearly 3,000 people were killed in the September 11 terror attacks at the Pentagon, where 184 people died when a hijacked aircraft crashed into the building. Mark Milley, chairman of the Joint Chiefs, says Americans really came together after such a dark day.
Those terrorists hated America. They hated our Constitution and the values that bind us together as a nation. They hated freedom and democracy, the idea that we are all equal.
Meantime, in New York, at the 9/11 Memorial, where the World Trade Center once stood, Vice President Harris in attendance, along with current New York Mayor Eric Adams, former mayors Michael Bloomberg, of course, founder, majority owner here at Bloomberg LP, and Rudy Giuliani, also both senators from New York, and New York Governor Kathy Hochul, presidential candidates like Vice President Mike Pence, former President Pence, and Florida Governor Ron DeSantis, also here commemorating that sad day. North Korean and Russian officials confirming North Korea's leader Kim Jong-un will visit Russia. He's said to be on the way. They could be meeting to talk about North Korea supplying arms to Russia. New COVID booster could be out soon. The FDA expected to approve Pfizer and Moderna boosters. That could happen as early as today, according to the New York Times. Then the CDC would meet to decide who exactly should get this booster and who should get it first. And okay, guys, then there's this.
We're certainly frustrated, and we're certainly frustrated, and we're certainly frustrated.
Yeah, they got to be frustrated. Giants quarterback Daniel Jones, 40-0 loss to the Cowboys, and that was week 1, right? I mean, the New York Times is calling the game a laugher. It's among the worst season openers in NFL history. Of course, this wasn't the worst loss ever for the Giants. There was 45-0. That was back in 1948 against the Eagles, and just wanted to look up what the absolute worst game in NFL history is today. That was 1934. A team called the Cincinnati Reds lost to the Eagles, I think, back then as well. That game was 64-0.
So the Reds were a football team back then?
Yeah.
They were.
Wow.
Yeah, but maybe not quite the same. Obviously, they've improved a little bit since then.
Yeah. By playing baseball.
Very good. All right, Denise, thank you very much. We appreciate that. Coming up in the next hour, we're going to check in with Diana Rossetto Pena. She's the equity research analyst for Bloomberg Intelligence. She's the analyst that covers the J.M. Smucker, the Hostess. She follows those companies in that sector, so we'll get the breakdown there of that deal and what it means for that space. Interesting story out, Matt. Morgan Stanley, they're saying Tesla's Dojo supercomputer may add as much as $500 billion to the company's market value through faster adoption of robo-taxis and network services. That's a big number. Stock's higher.
No, it's huge, and the stock is much higher, like 10% higher. I mean, Tesla right now adding like $80 billion to its market cap because of Adam Jonas's note. Adam Jonas is, of course, the auto analyst at Morgan Stanley. He leads the team over there. I guess they wrote the note together, but they raised their price target to $400 a share for Tesla from $250. Of course, it had already surpassed the former target. Right now, it's trading at $271. So, yeah, they're saying they can get $500 billion of market value because of the Dojo supercomputer. That's essentially their AI play, Tesla's AI play.
Yep.
Except for instead of training your model to help you with Yahtzee or win at Scrabble, they're training their model to help their self-driving technology.
And these analysts are saying that this Dojo could do for Tesla what Amazon Web Services did to Amazon and their e-commerce business. So an interesting way to think about that. We're gonna have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Phil Orlando. He's a chief equity strategist at Federated Hermes, get his thoughts on these markets, and we're going to break down that consumer M&A trade, J.M. Smucker and Hostess deal. We're going to break that down with a Bloomberg intelligence analyst. We're going to speak with Megan Clark, and she's going to join us here in studio. She's the CEO of Criteo. She's going to join to discuss her company, which is a publicly traded company in the ad tech space. So we're going to break all that down in the upcoming hour, and we're going to stay on top of where these markets are. Right now, let's go to news with Mr. Charlie Pellet for the Bloomberg Business.
Thank you very much. And here's what's going on. I got you covered on the markets with the Dow, the S&P, and NASDAQ back to work Monday, and we are higher across the board. S&P right now up by 15 points. That is a gain of about 0.35%. The Dow up 26 points, up by 0.1%. And NASDAQ up 80 points, up by about 0.6%. 10-year yield 4.28% with a 2-year that's now yielding 4.98%. Gold up $4 the ounce to $19.23, up by about 0.2%. And West Texas Intermediate crude up 0.1%, 87.61 for a barrel of WTI. Bitcoin falling by 2.7% right now to 25,122 on Bitcoin. Instacart and its backers have set the stage for an IPO that may value the grocery delivery business at up to $9.3 billion, less than a quarter of what it was worth at the height of the COVID-19 pandemic. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence, and he was a guest right here on Bloomberg Markets.
Instacart's business, the unit economics look a lot better than some of the other providers, whether it's DoorDash or Uber, simply because they layer a lot more ads. For every dollar in transaction revenue, they make about 30 cents in ads. That's phenomenal for unit economics.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Apple is extending an agreement to get modem semiconductors from Qualcomm for 3 more years, a sign that its ambitious effort to design the chips in-house is taking longer than expected. UBS Group cutting Asia wealth management jobs in the low hundreds, only months after completing its takeover of rival Credit Suisse. And cable giant Charter Communications and Disney have reached an agreement ending a blackout of ESPN for millions of pay TV customers. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. Also streaming live on that YouTube thing. I think that's the intraweb. So go over to youtube.com and search Bloomberg Radio. As Charlie was just reporting, some solid green on the screen here as we start the week. Let's check it in with Bailey Lipschultz. He covers the markets for Bloomberg News. Bailey, what are you looking at?
Yeah, as you guys mentioned before the break, Tesla up 9.4%, biggest intraday gain since late January after that upgrade from Morgan Stanley, so providing the biggest boost to both the S&P 500 and the NASDAQ 100 so far in today's session. Among the worst performers, though, Newell Brands, RTX, and J.M. Smucker, 3 worst performing stocks in the S&P 500. Newell extending a slide to a 2-month low, that ahead of getting the boot from the S&P 500. So underperformers, Lincoln National and Newell Brands, that's going to take place prior to the open on September 18th. 2 of the outperformers this morning, or so far today, Blackstone and Airbnb, getting added to the S&P 500. So seeing investors position just a bit for those two. And RTX down right now more than 7%. Metal issue leading to an outlook cut. Does not seem to be like there's a lot of optimism related to that update. Again, down 7.4% this morning.
All right, so those are some of the moves we're looking at. Oh, sorry, was it? Sorry. Those are some of the moves we're looking at in the market right now. And then Tesla, of course, we talked about. That's a huge move, right? A 10% gain for Tesla, already a giant company.
Yeah, and it's all, as you mentioned, that optimism around Dojo. One thing to keep in mind, as you mentioned before the break, is that when you look at expectations as it relates to Morgan Stanley, now that $400 price target is the street high according to the terminal. This is a stock that is, one of the more hotly debated when it comes to sell-side expectations. 23 buys, 20 holds, and 9 sells. So striking an optimistic tone from Adam Jonas, who, has been one of the analysts who's kind of really been all over this company and given, the relationship between Elon Musk and Morgan Stanley as a whole. Interesting to see them downgrade the stock back in June, but now getting back into the bull camp.
I haven't done the analysis, but I bet there's an extraordinary high correlation between the analysts that have the buys on the stock would identify as tech analysts, and the ones that have holds and sells would identify as auto analysts. So that's kind of how it's always been for that name.
No, yeah, that's interesting. That's been one of the things that, going back to my healthcare days, was interesting to track Johnson & Johnson because of the medical device, consumer, and pharmaceuticals. You're talking to some of the med tech guys, they're a bit more cautious, looking more for that long-term growth, whereas if you were a consumer analyst kind of thrown onto the stock, a bit choppier of a model, if you will. Another stock, as you guys are going to talk about in a bit, James Smucker down 6.3%, this coming after the announced $5.6 billion deal to acquire Hostess Brands, the Twinkies maker, kind of more consolidation across some of these snack makers. So investors of Hostess will get $34.25 in cash and stock. That stock at a record high. And on the flip side, James Smucker, again, one of those worst performers in the S&P 500 this morning.
What do you make of the IPO action? I mean, the window is open, right? We have a number of companies coming to market, but it doesn't seem like it's wide open, and the valuations, there's no exuberance for these IPOs.
Yeah, you're seeing a lot of, looking at the filings we got from Instacart and Klaviyo today, looking at kind of what we've been hearing from ARM ahead of its pricing expected on Wednesday. Under promise, over deliver, really lowering expectations, tighter float, getting some cornerstone investors to snap up a good chunk of those shares, likely to bake in a bit of an IPO pop. We know that we've been reporting on the dearth of IPOs, the fact that investors want closer to a 30% discount. So when you're looking at Instacart right now, with the high end of that range, a 76% drop from the peak valuation back in 2021. Even Klaviyo closer to a 12-13% discount to their last funding round. So companies getting more comfortable with lower valuations going public, and investors obviously wanting to buy deals on the low and then probably turn around and sell them in an opening day pop.
What are the timing of these deals, Bailey?
We're expecting to see ARM price its IPO Wednesday evening after the market close. Debut will be sometime on Thursday. That's going to be trading on the NASDAQ, so a bit of a different process than we would have normally with the NYSE. And then the expectations are that Klaviyo and Instacart will be hitting the road this week into early next week. Expectations, I believe, are a Tuesday pricing with Wednesday debut potentially for both. So we'll get an interesting, back-to-back weeks of 3 of the more closely watched IPOs in this post-Labor Day window.
Kenvue, which I kind of thought was such a great deal. Good brands, the consumer products part of, was it?
Johnson & Johnson.
Johnson & Johnson. Brands we all knew. Stock traded well in the IPO, but it's kind of come back down, hasn't it?
Yeah, trading right now around $22. That's where it was priced. So it actually was trading below the IPO price. It's holding, but the big thing is when this deal was initially announced, talking to some folks who were on the deal, they wanted to price it with a pop. They wanted to get a good deal out the door. But as part of the separation from J&J, it was a split off. So investors in J&J could swap their shares for Kenvue. As we've seen that kind of play out with the inclusion in the S&P 500, a little bit more stability, but a lot of uncertainty around what this company is going to look like going forward, just given kind of exposure to Tylenol lawsuits and everything else.
Yep. All right, Bailey, thanks so much for joining us. Bailey is both our equities reporter in general and then just kind of our IPO SPAC dude.
He covers meme stocks, too.
He covers meme stocks, too.
Did you see Dumb Money yet?
I don't think it's out in theaters. We talked about it, right?
No. Okay, so when Dumb Money comes out, we'll get a review from Bailey.
Why do we look to Bailey when we talk Dumb Money? Oh, because
he's
the
meme
stock
guy.
reporter.
Okay. It's all about the GameStop saga.
All right, good stuff. And the apes and all that kind of stuff. Yeah. Let's bring in somebody who does this stuff for a living, not, the meme stock silliness. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. Phil, we got a little bit of a lift in the market today. What do you think, Phil, for you is going to be the next catalyst for this market, one way or the other?
Well, we've got a couple of interesting data points just this week, which I think
may run counter to the thought process of the market in general here over the course of this year. For example, I think tomorrow we're going to get an update on inflation, the consumer price index, and full disclosure,
Wednesday.
Wednesday.
CPI comes out Wednesday. Yeah.
Thank you. Yep. Inflation's been coming down sharply over the course of the last year. Not a problem. But as we look at the numbers that we're about to get, and I'm going to look at my notes here to make sure I get the numbers right. The nominal inflation in the month of July was up 0.2%. In the month of August, the number that we're going to see on Wednesday, that number is going to be up 0.6%. On a year-over-year basis, the inflation was up 3.2% year-over-year. For the month of August, it's going to be up 3.6%. So inflation's going the wrong direction. You say, well, how is that possible? You look at energy prices, and Paul, I think you and I talked about this a month ago. Energy prices, crude oil, is up about 35–40% over the course of the last couple of months. Gasoline prices are up 25% so far this year. And that's starting to manifest itself in nominal inflation. So inflation's going in the wrong direction. And then at the same time, later in the week, I think Thursday or Friday, we're going to see retail sales. This is very important. August is, we're right smack in the back to school season. The month of July was very strong. Headline retail sales in July was up 0.7%, in part because online shopping was very strong. Amazon had its Amazon Prime Day. Walmart and Target do similar promotions. And so headline retail sales were up 0.7%. In our view, that pulled forward some of the normal back-to-school spending we would see in the month of August. The expectation for August that we're going to see on Thursday is only up 0.1%. That's versus a 0.7 gain in July. When you look at the control number, which strips out the autos, the gas, the building materials, the food, et cetera, control was up a full percentage point in the month of July. It's expected to be down 0.1% in the month of August. So again, those numbers are going the wrong direction as well. So,
which is, by the way, Phil, this is, I mean, that's a grim picture that you're painting. So inflation on the rise, and I guess retail sales, but you could say economic growth on the decline.
Beautiful.
Almost a stagflationary month. Does that concern you? I mean, what does the Fed even do in that situation?
Yeah, well, you took the words right out of my mouth, and that's what the Fed is now grappling with. If in fact that these numbers that are expected get reported, is this a stagflationary environment? So we roll ahead to the next week, and then that's the next FOMC meeting. I think the Federal Reserve pauses. I mean, our view is that the Fed literally does nothing on September 20th because you've got these cross currents in the economy, and they wait until that November 1st meeting to see if any of this stuff sort of shakes out. So our view has been that the Fed will give us one more hike on November 1st, to take the upper band of the funds rate up to 5.75. That probably gets it done in terms of establishing a terminal rate. But then again, in terms of what are these longer term cross currents in the economy, our view is that the economy, because of that, the Fed probably stays on hold until the back half of next year before they begin to cut interest rates. Our view, again, is that that's not in the market. So you look at the backup in inflation, the decline in retail sales, the fact that the Fed may be higher for longer, those are catalysts that we're looking at that suggest, you know what, that this correction that we saw in stocks month of August, the first part of September, maybe this has legs for another couple of weeks, another month or so, until we've got a clearer sense of exactly what the direction is in terms of the economy and monetary policy out of the Fed.
All right, Phil, so given that background, a little bit of a wait and see, what do we do in the markets here?
Well, I think the area that has done really well in, the first 9 months of the year, the growth stocks, the technology stocks, those are the stocks that are probably disproportionately giving up some ground here. I think taking chips off the table in those categories makes a lot of sense. But I don't think the entire market's going to collapse. I think what you're looking at is a rotation here, where the sectors that have underperformed, but the underlying fundamentals are very good. domestic large cap value, small cap, international. You've got a lot of these defensive categories that are selling at very cheap PEs with dividend yields that are 2 or 3 times the broad market, 1.5% versus say 4 or 5%. I think those sectors of the market actually do pretty well. So I think there's a little bit of a rotation here where the laggards are going to play catch up, and the leaders are going to allow some of the froth to come off over this typically volatile August, September, October period.
All right, so I wonder what you think about the possibility of a real recession. Everybody seems to be writing that off for this year, but could it still come next year? And if we have it in a period when inflation is just so stubborn, what does that mean for the investment landscape?
It's a great question. And the reality is that the odds of a hard landing have been reduced, a recession. The odds of a soft landing have increased. We did not believe that the economy was in recession in the first half of last year when GDP was negative a couple of quarters in a row. A lot of folks think we're in recession now. We disagree. We think the labor market's simply too strong. But as you look out 12 months in terms of the lag effect associated from a very tight or an incrementally tight monetary policy and the fact that we may do more over the course of the next couple of meetings, we think the economy will slow down. The question is, will it slow into recession? That's not our call right now, but you can't, I don't know that you completely take it off the table. And that would be, I think, new news to the market if the economy did continue to decelerate, but decelerated enough such that we started looking at negative quarters next year. And the Fed would have something to do with that if, in fact, they're continuing to tighten policy in order to combat, still high levels of inflation, but we start to see an increase in the rate of unemployment and a decrease in GDP growth, then the recession discussion, 6 months from now, 12 months from now, becomes a more serious one.
All right, Phil, as always, appreciate getting your good thoughts there. Phil Orlando, Chief Equity Market Strategist, and he's head of the Client Portfolio Management team over there at Federated Hermes. They got some coin under management, about $600 billion in assets under management. So big shop. Originally out there in Pittsburgh. That's where I would make my trek once a year to go see the good folks at Federated. Looking at the market, S&P is up 0.5%. The NASDAQ's up about 0.6%. So a solid little move, kind of holding in there. And the 10-year Treasury yield up a couple of basis points, 4.28% on your 10-year, almost 5% on the 2-year. We'll keep an eye on that. This is Bloomberg. Let's get some company news right now. Lisa Mateo.
Thanks, Paul. Apple is extending its agreement with Qualcomm for 3 more years, a sign that its own chip isn't ready. The news comes a day before the tech giant gets ready for its big product launch. More from Bloomberg's Ed Ludlow.
The story here is that doing it yourself is difficult, particularly when you want your modem to be able to connect to the latest generation network, 5G, but also work across jurisdictions. And, what's interesting going into this Apple event is that we believe the iPhone 15 that was to be launched tomorrow would be the last generation that used a Qualcomm modem chipset. Well, based on the agreement that's out this morning, that is not the case.
Now, Bloomberg reports updated AirPods and faster watches will also be introduced tomorrow. Shares of Apple right now up a fraction. Shares of Qualcomm, they're up about 3.5%. Tesla's Dojo supercomputer may add hundreds of billions of dollars to the company's market value through faster adoption of robotaxis and network services. That's according to analysts at Morgan Stanley. Bloomberg's Simone Foxman reports.
Supercomputer Dojo is being designed to essentially allow massive amounts of data during training processes to be processed by Tesla. And analysts at Morgan Stanley saying it could be add as much as $500 billion to the company's market value. The Morgan Stanley analysts also writing that it could put Tesla at an asymmetric advantage in a market that's potentially worth $10 trillion.
Now, shares of Tesla have already more than doubled this year. Checking in with shares of Tesla right now, they're up about 9%. I'm Lisa Mateo. We have more Bloomberg Markets coming up in just a bit, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, and NASDAQ all higher right now. Stocks have kicked off the week with gains as traders await economic readings that will help shape Wall Street's views on how close the Fed is from wrapping up its tightening cycle. Right now, we have got the S&P 500 index moving higher by 17 points. That is a gain of just about 0.4%. The Dow up 49, higher by 0.1%. NASDAQ, the composite index, up 82. That is a gain of 0.6%. 10-year yield, 4.28%, with a 2-year that's yielding 4.98%. Gold up 0.3%, 19.24 the ounce. And West Texas Intermediate crude, little changed, up 0.1% right now, 87.56 for a barrel of WTI. Well, as for the overall market backdrop, Phil Orlando is Chief Equity Market Strategist at Federated Hermes, and he was a guest moments ago right here on Bloomberg Markets.
I don't think the entire market's going to collapse. I think what you're looking at is a rotation here, where the sectors that have underperformed, but the underlying fundamentals are very good. Domestic large cap value, small cap, international. You've got a lot of these defensive categories that are selling at very cheap PEs with dividend yields that are 2 or 3 times the broad market, 1.5% versus say 4 or 5%. I think those sectors of the market actually do pretty well.
And you can hear more of the conversation with Phil Orlando on the Tape podcast. You can download it wherever you get your podcasts. Tesla shares surging 9% now. Morgan Stanley says Tesla's Dojo supercomputer may add as much as $500 billion to the company's market value through faster adoption of robo-taxis and network services. Again, recapping, we do have stocks advancing with the S&P up 18 right now, up by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie Pelleton, thank you so much. We appreciate that. A little bit of a merger Monday here. J.M. Smucker agreed to acquire Twinkies maker Hostess Brands for about $5.6 billion, furthering a growing consolidation trend among the companies that stock the shelf-stable aisles at the heart of supermarkets. Do we have an expert on this business? We absolutely do. Diana Rossetto Pena, she's an equity research analyst, follow all the consumer space for Bloomberg Intelligence. Diana, you were like one of our first BI analysts. You're like an original.
You're aging me.
Absolutely. I mean, you're there from just the get-go, and she's just become one of the top analysts out there covering the consumer space. Diana, what do you make of this deal? Smucker's buying Hostess. What's going on here strategically?
Yeah, well, strategically for Smucker, this will be a more of a mixed deal for Smucker in terms of on the sales side. It's definitely positive. It's a company that is growing in the mid-single digits compared to consumer foods, the consumer foods segment for Smucker, which is growing in the low single digits. So definitely on the sales side, it's going to be a positive. Now, if you go down the P&L, that's probably going to be a little bit more complicated.
Why is that?
Because EBITDA margins are not necessarily going to be as positive as the company is stating in our view. The company's call this morning said that they Hostess had a 23% EBITDA margin, which is going to probably be about the same as the consumer food segment for the company going forward. So we don't necessarily see a lot of accretion on that end.
I feel like there's room for real improvement on execution of Hostess product sales. You know, we have interviewed the CEO of Hostess a couple times, and as a result, I always go out and look for their products in stores, and I see that they do have like sometimes separate areas or specific displays, but the products aren't stocked very well, and there's just not enough attention drawn to them in in the points of purchase. Couldn't they improve that?
I think that is something that attracted Smucker. It seems that Hostess has been increasing innovation and points of sale, as you mentioned. And I think they're probably going to benefit from the supply chain leverage that Smucker has. And it's also, in terms of Smucker, it will give them a little bit more exposure on the convenience side, which is about 40% of Hostess sales.
So I'm a big fan of the Hostess brands, but there's some people out there that maybe even during the pandemic, I don't know, maybe they went to more of those, ring dings and all that kind of good stuff that we all love. But maybe now they're coming back and going back to more healthier food. What are the trends you're seeing out there?
So basically, it's consumers in the United States, they say they want one thing and they actually do another. So yes, you're right. People want to be healthier, and definitely the pandemic was a big catalyst for people going and purchase more of the indulgence snacks. I think there's still a little bit of growth on that aspect. People seem to be a little bit more permissible in the indulgence side. And I think that is probably going to fuel growth going forward.
I mean, Twinkies, obviously. Boom. And then the cupcakes. I like the orange ones, but they have the chocolate, and the Ding Dongs are a classic. The Ho-Hos, can't forget about those. I have always been a fan of the Chocodile.
Really?
Which is a Twinkie essentially dipped in chocolate. I've never really liked the Snowballs, but they're there. The Zingers. And then, I mean, they're just like classic brands. I feel like instead of just selling them at the 7-Eleven or the Duane Reade, they should be sold in, these trendy, like Urban Outfitters should sell these things, right? Because
but you can't fit on their clothes, though, so that would be a little bit of lack of synergy.
Why is J.M. Smucker stock down 6% today?
Well, obviously it has, as you know, there's also the acquirer curse playing into that. But like I said, I think it's more of investors I don't want to say not believing, but being a little bit wary about the bottom line for this acquisition and how accretive it's going to be on the EBITDA margin.
Are we seeing more consolidation in the grocery space? If so, why, or what's happening out there?
Well, we actually, I have been fairly active in terms of writing because Campbell Soup a few weeks ago bought Sovos. So
that's right.
Yeah, so that is definitely, it seems that acquisitions seem to be ramping up in the second half of the year. It really is in terms of, it's not unusual. I think we're going back to patterns compared to before the pandemic, that all of these big companies are looking for growth, and they're paying a pretty high price for it.
How can Hostess, go into bankruptcy, not just once, but twice? Was that just, who
bad management?
Who can't sell Twinkies? What happened? It was maybe before your time, but was it just, again, as Matt suggested, maybe just some bad management there?
Yeah, it was a combination of bad management. And at the same time, it was lack of innovation. The brands were falling out of flavor. And I think, now with more innovation and with the strong supply chain leverage, I think that they're probably going to be expanding into that.
Do you expect more M&A going forward in this space?
I think so. I'm a little worried about the premiums that we're seeing and the leverage expansion. Obviously, Smucker, it's their balance sheet is going, that net leverage is going to be 4.4 times.
That seems high.
Yes,
that's fine for my industry, the media industry, because we grow our EBITDA 15 to 20%. You guys don't grow your EBITDA that fast.
Exactly, and usually we should be able to see leverage in the 3 times, but now when we're looking at deals that are expanding into 4 times, it makes people a little nervous.
I wonder what are the other brands out there that are on the block? Like, do we know Hostess was on the block? Do we know? Or was this a surprise?
Well, apparently, according to Smucker management, the acquisition was a surprise. They themselves actually divested some of the food brands for pet. So divestitures seem to be also be on the block.
Smucker's has coffee, right? They make Dunkin' coffee for sale. They have Folgers.
Yeah.
They obviously do Jif peanut butter and the jellies.
And you're a Jif guy.
I love Jif. I'll eat Jif peanut butter straight out of the jar in a spoon.
I'm a Jif.
Wow.
Yes.
Jif. It's so
you
delicious.
break the tie. Okay.
And crunchy.
Yes.
But Smucker's also does Meow Mix and Milk-Bone, right? Are they getting out of the pet food business?
Yes, they are actually. They're concentrating on the pet snacks category, which is
Pepperoni.
Yes, exactly. Yes, Milk-Bone. So, but that is, I think, one of the arguments against the deal is this going to be a Big Heart pet brand 2.0? Back in 2015, the company acquired this company, Big Heart Brands, for $5.something billion. Leverage was also four times EBITDA. So and now they're divesting a lot of brands of it. So people are concerned about that.
What's your thoughts on Chewy? We got about 20 seconds.
Chewy, they're growing on their net sales per active consumers, and active consumers seems to be a pain point for them so far.
All right, good stuff. A reader just kind of writes in, Peter Pan peanut butter is where it's at.
That's not the case.
That's not a strong case?
Well, you know what? I don't actually. I had to spend a long time. I'm going to go out right now because I'm leaving.
Okay.
And I'm going to go get a jar
we have Smuckers. Upstairs
of
we
Peter
have Smuckers,
Pan.
just for
I'll
what
go
it's
over
worth.
to the Dwayne Reed and pick one up and see how it goes.
All right, we'll
but
see
I
how
think
it
Jif is still the reigning champ.
All right, Diana Rosado Pena, equity research analyst for Bloomberg Intelligence, breaking down this deal in the snack space. Right now, let's head down and get world and national news with Nancy Lyons down in D.C.
Thanks, Paul. Special ceremonies are being held today in commemoration of the 9/11 attacks. A choir sang at the Pentagon after the names of the victims there were read. Families gathered at the 9/11 Memorial in New York City and also read the names of those lost in the attack on the World Trade Center.
Dr. Paul W. Ambrose. Specialist Craig S. Emmonson, United States Army.
President Biden is returning from a trip overseas to India and Vietnam and will meet and speak with first responders and their families during a stopover in Anchorage, Alaska. The days are ticking down to a potential strike of the United Auto Workers against the big three U.S. automakers. The union has threatened to walk out Thursday if a deal is not reached. Deputy Treasury Secretary Wally Adeyemo told CNBC today the administration believes a deal will happen in time. Several top advisors are working as liaisons between the two sides in the negotiations. UAW President Shawn Fain says the union is ready to negotiate day and night. New Yorkers are hoping Aaron Rodgers will transform the Jets. The former Green Bay Packer will be making his Big Apple debut tonight.
It's an exciting team, and the team is ready. I feel like we just needed something to galvanize. I'm not saying I'm it. I'm just saying there's an energy that's kind of surrounded me, and the team has picked up on it.
Rodgers will have some familiar targets on the field, like former Packers Alan Lazard and Randall Cobb. The New York Jets will be hosting the Buffalo Bills Monday night for Monday Night Football to cap off the first week of the NFL season. Damar Hamlin, the Bills player who collapsed on the field last year, is not expected to play. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing. S&P 500 index up now by 19 points, higher by 0.4% at 4476. The S&P hovering right around the 4,500 mark. The Dow up 69 points, now up by about 0.2%. NASDAQ, the composite index, up 84 points, up 0.6%. The NASDAQ 100 index up 0.6%. Broad-based advance today, the Russell 2000 small cap shares up by about 0.4%. 10-year yield right now 4.28%, with a 2-year that's yielding 4.97%. Spot gold up 0.3%, 19.23 the ounce, and West Texas Intermediate crude up 0.1%, 87.64 for a barrel of WTI. So an update for the Dow, the S&P, and NASDAQ ahead of economic reports this week. A number of key reports, retail sales and consumer prices. As for the backdrop heading into those reports, Ethan Devitt is Chief Investment Officer at Moneta, and she was a guest right here on Bloomberg Markets.
Recession is now, I would say, fairly safely off the table for the rest of this year. We've seen all of the pundits rein in their expectations. Some of them have been contrite about it. Some of them are saying, well, they never really thought it was going to be a deep recession anyway. But it looks like just with this resilience of the consumer, the seemingly unbreakable economy, not even a financial institutions crisis can deter this economy, not the steepest rate rise cycle almost in history can deter the economy, nor the persistent high levels of inflation. And the consumer is buoyant, they have money on the sidelines, and they're feeling good.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Briefly, RTX has cut its full-year sales outlook and will take a roughly $3 billion charge in the third quarter as the aerospace giant tackles the financial fallout from the latest flaw in its marquee commercial aircraft engine. Recapping, stocks higher, S&P up now by 20 points, a gain there of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're doing that streaming thing on YouTube. Head over to youtube.com and search for Global News, maybe Bloomberg Radio. That works, right, Justin? That'll work, yeah. All right, that's cool. It's a whole internet thing. You know, the kids will figure it out. The kids will figure it out. All right, let's talk about ad tech, digital advertising, all that fun stuff. The part of the advertising pie that continues to put up some really solid numbers. And you think about the digital advertising, the Facebooks, the Googles. I use the old school words, not Meta or whatever the other one is. But there's technology behind that. media, and that is a fascinating part of the business. Our next guest is all over that stuff. Megan Clarkin joins us. She's the CEO of Criteo. Criteo. It's a NASDAQ-traded company. CRTO is the ticker to put into your Bloomberg terminal. It's a French company based in Paris. Megan, thanks so much for joining us here in a Bloomberg Interactive Broker studio. What do you guys do at Criteo?
We're an ad tech company, as you said. We focus in on commerce media, retail media.
Retail media. What is retail media?
Well, retail media is the lighting up of advertising on retailers' sites, or even broader commerce sites like Uber. They're now selling advertising, and it's incredibly successful. It's the fastest growing area of digital advertising. What Criteo does is we enable all of that for them. We make sure that the right ads gets to the right person on the right side at the right time. And we also make sure that their inventory is showing up for the demand side, or the advertisers and the agencies who are looking to spend their advertising dollars across sites. So it's competing, if you like, with traditional media advertising. It's competing with Google. It's competing with search. It is the new wave of advertising across retailers.
What's a typical advertiser in that part of the marketplace? Is it a Coca-Cola trying to do some brand advertising? Is it a car agency trying to get me to go out and buy something tomorrow?
Yeah, it's all of that. Okay. So they now see a real opportunity getting in front of audiences who are actually shoppers. They're actually on their buyer journey, and they're really close to the point of sale, as opposed to on a social site where it's a conversation that's happened, and they might happen to see the Pepsi ad, and it might spark a sort of thought to go. If you're actually on Costco and you're getting a Pepsi ad and they stock Costco, you're very close to that point of sale. Right. So it's a very viable advertising channel for all of those brands.
So your clients are the Costcos of the world as opposed to the Pepsis of the world?
Well, we service both because we light up the advertising for Costco, for Macy's, for Best Buy, for half of the biggest retailers in the US. We power that advertising. But we also make that advertising inventory available to the Pepsis, to the Cokes, we have 2,600 brands that we support to try to bring their dollars into that retail media space.
All right, how has that market, that's been, when you think about the global advertising pie, and you take the traditional media, not growing, declining, depending upon what you're looking at, and you look at the digital piece, continues to grow. Yeah. And that was, when I used to cover this 4 or 5 years ago, still growing at 20%. Yeah. Where is a digital dollar spend growth rate kind of over the next several years from your perspective?
Well, if we think about retail media, the retail media marketplace is by 2025 going to be worth about $110 billion. Okay. Now, if you think on top of that, there's a star player in there right now, which is Amazon. Yep. And Amazon's been doing this for 6 to 10 years. Now, Amazon have last quarter posted about $11 billion worth of advertising and have a run rate to about $40 billion by the end of the year. And if you think of traditional TV, over all of the TV players, that's a $66 billion market. Yep. So Amazon in the retail space, $40 billion. All of TV, over all of the years that it's been playing, about 66, is this real opportunity in retail media that's just exploding.
How are retailers in general, how are they as clients adapting to this whole concept of you can monetize your kind of your user base, that whole concept, through advertising and other things?
Well, it's interesting because they're not media players, you know, they're retailers, but they look at Amazon and they look at Walmart and they look at Instacart and they look at how valuable this proposition is. And this is where Criteo comes in, because we come into them and say, hey, we've got this platform. We will represent you. We'll make sure that the ad tech works for you, and we'll make sure that you're seen as compared to others for all of the advertisers that we represent and all of the agencies, the 5 big holding companies that we represent. So we create an ecosystem around retail media, and they love that because they don't have to think this through themselves.
Right. How do the agencies think about retail media? It's not going to ABC and buying a 30-second spot on the Super Bowl or whatever. So it's a different type of channel. How do they view it?
Yeah, it's different. These are all tactics. So if you think of an agency, their job is to make money for their brand. Yep. And so depending on what the brand is and what their objective is, they'll either go to broad-based advertising, brand advertising across traditional TV, or they'll go into a big audience on a social environment or a search environment, or they'll go to a precision, a point of sale across retailers. And so think about that as a new way to get a return on investment for those brands, for those advertisers.
So we think about retail, I think, Amazon or Walmart, but there are adjacent retail industry, travel, hotels, all that kind of stuff. How's that business evolving? Because people are spending a lot of time on those sites as well.
Definitely. So we see retail media as sort of the core of this. And then there's this broader opportunity called commerce media. And that's exactly what you're talking about. So Uber was a client that we signed last quarter. And if you go to Uber Eats, you see Criteo in action. You see the sponsored ads appearing when you're searching for a product. You see their display advertising, their video advertising. And they look, for all intents and purposes, like Amazon when you go there. So it's really interesting to see how that's going to unfold.
It's interesting. We see this a lot. Companies, platforms have this audience, this unique audience, and the question is, how do you monetize it? The current example I have, and I've mentioned this to the company, is Peloton. They're searching for revenue, and I'm like, you've got X number of millions of people, and they are crazy people, because I am one of them, and as my household, there's no... You need to go down to Peloton people and start pitching them to monetize, start putting some ads on there.
But it's so true. I mean, they're a valuable audience, and if they're shoppers or they're in that mindset to buy a product related to physical fitness, then they're prime candidates.
And that is that is kind of what you guys do, and kind of what a lot of the smart people in the ad tech space are trying to enable for folks to monetize their audience. Megan Clarkin, thanks so much for joining us. Megan is the CEO of Criteo. Again, a NASDAQ traded stock. I like to flip these things around all the time. CRTO is the ticker. 7 buys, 6 holds on the stock, and 1 sell. So a little bit divided street there. We're going to have more coming up. This is Bloomberg. Let's get some company news right now. Elisa Mateo.
Thanks, Paul. The standoff between Disney and cable provider Charter Communications is over. The companies reached an agreement to resume carrying Disney channels, including ABC and ESPN. Bloomberg intelligence analyst Geetha Ranganathan says that the deal is a win-win for consumers and TV companies.
We have 14.7 million Charter subscribers who are affected by this blackout, so this is good news for them. But this really has huge implications for the rest of the pay TV companies, such as, a Paramount, a Fox, a Warner Brothers Discovery, which are heavily reliant on, pay TV revenues. They're not as diversified as a Disney, for instance, which, has a huge exposure to theme parks and studios and things like that.
Now, shares of Disney right now, they're up nearly 1%. Charter Communications shares up more than 3.5%. And since Geetha mentioned the effect on other pay TV companies, we're going to check in with Paramount shares right now. They're up about 0.5%. Warner Brothers up about 2.5%. Twinkies owner Hostess Brands will be acquired by J.M. Smucker for about $5.6 billion. Bloomberg's Isabel Lee reports.
Investors will get $34.25 for each Hostess share, and that's a 22% premium from Friday's close. And shares of Hostess have surged more than 26% since before August 25. Bloomberg Intelligence says this acquisition may revive growth in the consumer division, and bakery goods have soared during the pandemic, and Hostess holds around 19% of that market share. As for Smuckers, it's fallen around some 11% year to date.
All right, let's check in with shares of J.M. Smucker right now. They're down about 6%, but Hostess brand shares, they're up 19%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, we are holding on to these gains this morning. The S&P 500 is up about 0.5%. NASDAQ up about 0.3%. Their yields pretty steady here. 10-year Treasury 4.28%. I get 4.98% on the 2-year, so that's not too bad. WTI crude oil kind of steady here, just under $88 per barrel. Bitcoin, that's kind of a story here today, off 2.5%, 25,180. We had broken below $25,000 level, now bouncing back above that. So we'll keep an eye on that. Right now, let's go on to Washington, D.C. We'll get World International News with Nancy Lyons.
Thanks, Paul. Bagpipes are playing and bells are tolling today as the nation commemorates the horrors of 9/11, 22 years after the attacks. Nearly 3,000 people were killed when hijacked planes crashed at New York's World Trade Center, the Pentagon, and near rural Shanksville, Pennsylvania. Vice President Kamala Harris joined the ceremony at the World Trade Center, while President Biden will join service members and their families at a military base in Anchorage, Alaska. He's heading home from an overseas trip to India and Vietnam. Well, the Biden administration is sounding optimistic a deal can be reached before a Thursday deadline between the United Auto Workers Union and automakers. Deputy Treasury Secretary Wally Adeyemo told CNBC administration officials are working with both sides to get a deal done. Bloomberg's Ryan Teague Beckwith says there are good reasons to avoid a strike.
This is something where it could be billions of dollars worth of a hit to the economy if they did strike against all three automakers. So I think that everyone involved understands the stakes here. It is hoping to avoid a strike. But that said, these things follow their own logic, so it's always in the cards.
Bloomberg's Ryan Teague Beckwith reporting from Washington. North Korean leader Kim Jong-un is reportedly on his personal train heading for Russia to talk with Russian President Vladimir Putin. That's according to South Korean media. It's expected Putin will be seeking additional arms to help in his invasion of Ukraine. One NATO official says while that is expected to be the topic of conversation, an arms deal is not yet done. Russia is the first country to be visited by Kim after the coronavirus pandemic when his country's borders were strictly closed. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul.
All right. Paul Sweeney, Matt Miller here in our Bloomberg Interactive Brokers studio, looking at these markets here. Again, following up on that story about this strike here, that I was just bumped into Rich Bork. He's an analyst at Bloomberg Intelligence. Just ran into him at the 6th floor here. That's what happens when you come into the office. You bump into people. He says this is going to be a big issue. He covers the sector here for Bloomberg Intelligence. So I went and looked at the reporting here from Bloomberg News. The United Auto Workers Union says it's ready to negotiate day and night with General Motors, Ford Motor Company, and Stellantis to reach a new contract agreement by the September 14th deadline. Quote, we are ready to negotiate in Detroit 24/7, just as we have been for the past 7 weeks since we gave them our members' demands, UAW President Shawn Fain said in a statement. Despite receiving no response for over a month, when the CEOs are ready to make a serious offer, we'll be there day or night. On Sunday night, Fain said that the union officials had met with GM and Ford that day and planned to meet with Stellantis Monday morning. Quote, things are moving, but they're moving very slow. We've got a long way to go in 4 days. So this is, as our reporting has said, could be a big issue. Perhaps, targeting all three of the big automakers at what point kind of raises the ante a little bit. So we'll have to see how this develops over the next several days. But again, Thursday night will be the ultimatum, and the automakers could be out on strike as soon as Friday. So obviously a big news for the auto industry, but also a big point here for organized labor in the U.S. Looking at these markets here as we close out the hour, the S&P 500, it's up 0.5%. NASDAQ up 0.7%, a little bit more life there. So we're seeing some nice moves there. 10-year Treasury, 4.28%. The dollar giving back a little bit here after a very strong couple of days. Sound On with Joe Matthew starts right now from Washington, D.C.
our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the eight ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Offers an alternative to China. Welcome to the fastest show in politics, as President Biden makes his way home from the G20 in India, along with a stop in Vietnam, after drawing contrast between America's economic vision and China's Belt and Road. But will it matter? We're joined in studio with Bloomberg White House correspondent Michelle Jamrisco, and we'll talk with Craig Singleton from the Foundation for the Defense of Democracies, fresh off his op-ed in the New York Times. Analysis from our signature panel. They're both back with us today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. And later on, we'll mark the anniversary of the 9/11 terror attacks with somebody who helped to orchestrate the coverage that so many Americans relied on that day, Bloomberg's David Weston, who was then the president of ABC News. So let's get to it. A lot to cover after a look at Wall Street. For that, we turn to Charlie Pellet.
Thank you very much, Joe Matthew. The Dow, the S&P, NASDAQ are all advancing right now, with the S&P 500 hovering near the 4,500 mark. We've got a lot of green on the screen here, with the S&P now up 22 points, a gain of 0.5%. The Dow higher by 80 points. That is a gain of 0.2%. NASDAQ, the composite index, though, outperforming, up 0.7% right now, higher by 96 points. The 10-year yield, 4.28%, with a 2-year that's yielding 4.98%. Gold up 0.2%, $19.23 the ounce. And West Texas Intermediate crude flat on the day right now at $87.52 a barrel. So yes, it is an up day. Stocks are rising ahead of economic data this week that will help shape Wall Street's view of how close the Fed is to ending its rate hikes. As for the market backdrop, Keith Lerner is Chief Market Strategist at Truist Advisory Services.
If you look at the S&P itself, you're basically in a range, kind of digesting the big year-to-date gains, and you're in the middle of that range, 4,600 on the upside and about 4,330 on the downside. And there's not a lot of momentum. And I would say, as we head into this kind of busy week, but also this month, there does seem to be a lack of upside catalyst as well. So again, we're just kind of, marking time right now.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Cable giant Charter Communications and Disney have reached an agreement ending a blackout of ESPN for millions of paid TV customers. It comes hours before the sports network's first broadcast of the new NFL season's Monday Night Football. Charter up 4%, Disney up by 0.9%. Briefly, Apple is extending an agreement to get modem semiconductors from Qualcomm for 3 more years. Apple up 0.3%, Qualcomm up 4.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Good to see you. Thanks for joining us. Happy Monday. Welcome indeed to the Monday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where we are waiting for the return of President Biden. He's on his way now after his trip to India for the G20, of course, the stop along the way in Vietnam, where he played down claims in a news conference that the U.S. wants to isolate China.
I met with his number 2 person here in India today. So it's not like there's a crisis if I don't personally speak to him. It'd be better if I did. But I think, look, this is not a criticism. It's an observation. He has his hands full right now.
So where are we in the relationship, and what comes of this trip? We're joined in studio by Michelle Jamrisco, my old colleague, now with us in Washington, D.C. It's great to see you carrying the title Bloomberg News White House senior reporter. So let's start with the takeaways here and the messaging. Is the U.S. learning, is the president learning new ways to counter China? It was widely noted that President Xi was not in the room for this confab. It gave the president free rein. to do what he needed to do.
Yeah, I mean, Joe, you know how these summits usually go. It's a lot on form and style over substance. And I think in terms of that first category, style and form, I think he's checking some boxes here. He saw the opening, China and Russia absent from this summit. He wants to move in and kind of appeal to the so-called global South countries that have been asking for more from this U.S.-led coalition. And he did do that. He spoke to them. He spoke to them in a lot of their own language, and he was speaking to China's so-called weakness right now. It's kind of weakness in its position economically as well as potentially politically. So I think that quote kind of says it all. He says he has his hands full right now talking about President Xi. Mm-hmm. That was a not so veiled swipe also, at what they're dealing with economically in China and what that means for potentially their position of power in the world.
He even seemed to indicate that it would keep China from invading Taiwan, which is a headline that seems to be resonating here. The communique always comes with a certain amount of angst, not much more than this time, though. Officials say they worked on this through 300 hours of meetings. It does not single out Russia for its invasion of Ukraine, but it does say that there were different views and assessments of the situation. What do we take from the communique, whether you like the writing or not? I could read it to you here. All states must refrain from the threat or use of force to seek territorial acquisition, but for many, it just didn't go far enough.
Yeah, leaning on the UN language there was the safest way to go. In order to bring the representatives from China and Russia on board for some sort of G20 agreement. Mm-hmm. Now, remember, over the past couple of years, and ever since the war started, really, there have been a lot of tie-ups in communique language because the U.S.-led coalition wanted to say Russia is the aggressor because they said something about sanctions. This time, those two components were removed. They leaned on that UN language, just the facts, and they could kind of focus on other things. So sort of a short-term sacrifice. Of course, Ukraine and others not pleased, but the U.S. saw an opening to kind of push forward on other issues. And in order to do that, they wanted to kind of leave the war language to the side for a bit.
We're spending time with Bloomberg White House reporter Michelle Jamrisco, senior reporter, I should say. And it's a perfect time for you to join us because you were way ahead on this idea of the global South rising, which is something that is now a mainstream part of the conversation. It certainly was on display at this G20
Connection lost.
On the recent visit to the White House by Prime Minister Modi. Now they've each had a visit here, and it's really changed the conversation as the president and the U.S. try to turn away from Russia and China. But it's a lot more complicated than that, isn't it?
Yeah, and in our teams, we were looking at this before it was cool, right? It's kind of become this big issue of talking about the global South and this tagline. What does it mean, actually? Well, I mean, this is years in the making, but, people are starting to wake up to the fact that powers like India, which is becoming an even bigger economic power and certainly a people power, most populous nation now, powers like India and Vietnam and the others are so-called swing states. So the U.S. needs to kind of convince them on certain issues. They're a bit bothered over the past few years, to say it lightly, about things like trying to get involved in the U.S.-China trade war or sanctions on Russia or the pandemic. They don't see this U.S.-led global order from post-World War II onwards working for them today, and they want changes. They want big changes, MDB reform. They want different trade and investment deals. They want the U.S. to show up at the table with money, not just platitudes and
Did this G20 do anything to change that?
I mean, I think that he's talking the talk. Biden was seen to be kind of speaking the language, as we said earlier, about, what does the global South want to hear in terms of infrastructure investment deals, in terms of MDB reform. So MDB reform has been one of the ones that the U.S. has really been plugging as a response to these global South requests. And we heard from U.S. Treasury Undersecretary Jay Shambaugh last week leading into the G20 summit, talking about how, yes, the IMF and World Bank are going to be looking at member quotas, giving shareholders more power. So in essence, giving global South countries more say in how those institutions are run, and hopefully getting more money toward real crisis issues and not just these high-fluting issues like climate, which the MDBs are kind of ill-positioned to tackle.
You can see why she's senior White House reporter for Bloomberg News. I'm so glad that you're back in the States
to be back
from
here
Singapore, right? How many years were you there?
6 years there.
6 years, amazing. And welcome back to you and your family. Don't be a stranger here on Sound On. Many thanks for the insights. Michelle Jamrisco with us here on Bloomberg Sound On. I'm Joe Matthew in Washington. As we add another voice to the conversation, I've been looking forward to this as well, because the op-ed jumped off the page in advance of this G20 The headline from Craig Singleton, China's military is going global. He is with us now, senior fellow at the Foundation for the Defense of Democracies. Craig, it's great to see you. Where to begin as we talk to Michelle about the emerging global South? You seize in your story on what's happening in Cambodia at the Ream Naval Base, and you point this out as the example to start your piece on what China's doing from Africa, all the way to the South China Sea, establishing strategic strong points, as they're called, to protect trade routes. But is there a lot more to it? This is about projecting power, isn't it, Craig?
Absolutely. Thanks for having me. I mean, this impending inauguration of China's, what will be their first Indo-Pacific military outpost in Cambodia, it just represents a major evolution in China's defense posture. But I think beyond Ream, right, China is employing all of these innovative asymmetric tactics to sort of undercut and offset American military might. And it has some pretty serious implications for, I think, the United States and its allies. And you're right, it centers around this notion of establishing strategic strong points around key maritime choke points and along key trade routes around the world. And sometimes those strong points will look like military bases like Djibouti and the one that's coming online in Cambodia. Other times they might just be agreements that let the Chinese pull in their military for refueling. At the end of the day, the Chinese are not going to go base for base with the United States. What we really have to understand as a country, right, is the strategic intent behind a lot of these moves. And that really has to do with confounding and constraining U.S. policymakers during short of war scenarios and even during a contingency over Taiwan.
How about that? You mentioned Djibouti, another example in your column, and maybe this is what Cambodia is going to end up looking like. It started as a civilian multi-purpose port. It has evolved into what you describe as a heavily fortified base, more than 250,000 square feet of underground bunkers. What's all that for?
Who knows? I mean, the Chinese have a long track record of relying on bunkers at their strategic locations and facilities inside of China to hide armaments and nuclear weapons and other munitions. We just don't know what's really under the hood there. And we'll probably never know. And a lot of that has to do with the lack of transparency that the Chinese have shrouded this broader expansion in. What we really need to be concerned about, I think, is that a lot of these initial, what appeared to be civilian projects in places like Djibouti, places like the United Arab Emirates, the places like Gwadar and Pakistan, are starting to be sort of augmented with military might, tangible military assets. And what happens is that the Chinese are going to be able to project and influence along these key choke points and frankly, I think potentially prevent us from shifting resources and personnel into China's near periphery in the event of a contingency. And so the Chinese are going to be able to build out this network over time that will be a lot cheaper, a lot less expensive, and a lot less sort of cost prohibitive than our global footprint. But they're going to be able to do so in a way that actually undermines and undercuts our ability to project strength. And that's sort of where I think the Chinese are heading right now.
Well, you're right that once commercial projects in the Belt and Road Initiative are now being retrofitted with military assets, was this the purpose of Belt and Road all along as we consider what the Biden administration is trying to pitch here at the G20 as an alternative?
Michelle was right. It's time for the United States to offer alternatives to some of these countries who I think are eager or perhaps concerned, not just about the debt trap diplomacy aspect of Belt and Road, but also whether some of these projects could potentially be militarized. I wouldn't go so far as to say that a lot of these projects went in with a strategic intent to militarize them, but China is opportunistic. And China also recognizes, and they publish this in their military doctrine and their military strategy, the notion that they can leverage China's exceedingly growing global footprint, that commercial footprint, for military purposes and to confound and replace the United States. These aren't secrets. This isn't Craig Singleton saying this. This is what the Chinese openly say in their doctrine and in their commentary. And I just think taking them for at their word is probably an important element for U.S. policymakers to proactively counter these moves.
So when you see Joe Biden, in the case of this past weekend at the G20 and also making the visit to Vietnam, when you squint your eyes, do you see a global South that could be friendlier to the U.S. if the right investments are made in this case? Or does China have such a head start that it's not possible?
Potentially. I mean, I think a lot of these countries have sort of been wising up to the fact that not all of China's aid or these infrastructure projects are sort of without risk or without strings. They certainly are. They're looking for alternatives. There are moments when it makes sense for the United States to get involved, and there are other times when perhaps other partners like Japan are better suited to support those types of projects. And while Xi Jinping obviously chose to not attend the G20 summit for, I think, a host of different reasons. The reality is that next month he's going to be hosting the Belt and Road Forum in China that'll have more than 80 countries attending. And I think that's a clearer demonstration, particularly as Michelle mentioned across the global south, that China's message is not falling on deaf ears. It is resonating. The question is, how does the United States, how does its partners work together, I think, to come up with an alternative architecture that may be a little more appealing to some of these countries.
Read his column in the New York Times. I found it on the terminal, by the way. Guest essay from Craig Singleton, China's military is going global. Craig, great to have you back. Let's keep this conversation going. He's senior fellow at the Foundation for the Defense of Democracies. Let's assemble our panel for their take. Rick Davis and Jeannie Shan Zaino back together again. Bloomberg Politics contributors coming off the weekend. Great to have you both here. Jeannie, I'll start with you as this president makes his way home. Was it worth the journey, and did he use his time well? I'm hearing more about how tired he was than initiatives that were brought forth at the G20, but the media is not fair that way. What's your take?
Yeah, it is a long trip. It was a whirlwind. You know, I'm hearing a lot of disappointment, I think largely due to the language of the communique in terms of Ukraine, also in terms of climate change. People think it wasn't tough enough. But I do have to say, there were a couple of big proposals when it comes to confronting China. And you just mentioned one of them, this big global infrastructure proposal, also reinvestment in the World Bank. Those are two big initiatives that, should they come to fruition, really lend to the president's ability to confront China and the world's ability to confront China. So I think it's a little short-sighted just to look at the language of the communique, because it was weak and it wasn't as strong as it was last year. But there were other things to come out of this meeting as well.
We'll have a lot more time to get into this, Rick, but in our minute that we have here, how concerned are you about the way that communique was finalized?
Yeah, look, I mean, I think they knew going in it would be a challenge to try and get something as strong as it was a year ago, especially as it relates to the Ukraine and Russia. But look, I think people are really missing the importance of Biden's trip to Vietnam. That's front line of concern, trade, investment, and military with China. And I think that trip alone probably was worth the price of admission.
Stopped by the John McCain Memorial while he was there. We're going to talk about that and a lot more with Rick Davis and Jeannie Shan Zaino here on the fastest show in politics. Hearing from some of the Republican candidates for president about this trip as well. That's next, only on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long at Bloomberg. Stocks are rising ahead of economic data this week that will help shape Wall Street's views on how close the Fed is from ending its rate hikes. Right now, the S&P is up 26 points to 4484. That is a gain of 0.6%. Dow Jones Industrial Average up 93 points, up 0.3%. The Nasdaq Composite Index now up 124, up by 0.9%. 10-year yield right now is at 4.28%. We've got the 2-year yielding 4.99%. Spot gold up $4.50 the ounce to $19.23. That is a gain of 0.3%. And West Texas Intermediate crude unchanged on the day, $87.50 a barrel. Again, the 10-year yield 4.28% with a 2-year at 4.99%. We've got Tesla rallying as Morgan Stanley upgrades the company, saying its Dojo supercomputer may boost market value by as much as $500 billion. Tesla shares, they're up now by 9.4%. Again, recapping, stocks are higher. S&P up 26 points, up 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
President Biden is making his way back to Washington from the trip over the weekend of the G20, the stop in Vietnam, and he's going to be stopping in Alaska on the way, where we do expect remarks from the POTUS on this anniversary of the 9/11 attacks. We talked about this at the end of last week. Some criticized the president for not being either at Ground Zero in New York, Shanksville, Pennsylvania, or here in Washington across the river at the Pentagon. But of course, the administration was well represented in all of these areas, and we'll talk a little bit more about the anniversary later this hour in a special conversation with David Weston. As we mentioned, though, he's on his way back following the mission to the G20 and spoke in his news conference in Vietnam about the problems facing China, generating headlines on the terminal. The economic trouble in China may, in fact, in his view, keep China from invading Taiwan. Here's what he said.
He has his hands full right now. He has overwhelming unemployment with his youth. One of the major economic tenets of his plan isn't working at all right now. I'm not happy for him that, but it's not working. So he's trying to figure out, I suspect, I don't know, just like I would, trying to figure out what to do about the particular crisis we're having now. But I don't think it's a crisis relating to conflict between China and the United States. As a matter of fact, I think it's less likely to cause that kind of conflict.
Less likely to cause that kind of conflict. And of course, Joe Biden knows a bit about what it's like to deal with economic strife, referring there to the possibility of him meeting with President Xi and exactly where our relationship stands. We reassembled our panel. Rick Davis and Jeannie Shanzano joined, Bloomberg Politics contributors. What's your thought on that, Rick? There was so much talk about who was not in the room in the case of President Xi, President Putin. Is Joe Biden correct on this, that President Xi's got his hands full to the point where he's not so much of a threat?
Yeah, I don't think you can diminish the threat just by the fact that domestic economic circumstances and unemployment are running rampant in Beijing. If anything, I mean, frankly, I would worry more about that. I think domestic turmoil has always been one of the contributors to adventurism around the world, try to take people's mind off of their own circumstance by creating this nationalistic fervor that, allows you to take an action, for instance, an invasion of Taiwan. So, and by the way, I mean, I think we've seen Xi talking a lot like that lately. So I would be more concerned, not less concerned, by an unstable domestic economic situation in China. And frankly, shocked that the president would think that China has taken its eye off the ball at a time when all we're talking about is their adventurism around the world.
What's your thought there, Jeannie? Does the economic trouble in China, God knows they've been trying to stimulate the economy to come back to life here, does it embolden President Xi, or does it make him feel cornered?
You know, I have to say, I agree with Rick on this. I think anytime you're looking at a leader in the modern world who is having trouble domestically and at home, there is always a concern that they look outward where they can have more influence and can potentially change the narrative at home. So I do think it is a real concern. I was also real concerned to hear the Ministry of State Security say the other day that there's a prospect that Xi may not come to the bilateral meeting in November in San Francisco. You know, that I think is very troubling because you want there to be conversation between the United States president and Xi Jinping. You want that kind of high-level diplomatic engagement, you know, even if nothing comes of it. The fact that he stayed away from India and now potentially may stay away from the November meeting is, I think, another sign of trouble as the U.S. continues to, despite what the president says, continues to befriend people right on his doorstep, something that upset Putin in the last 20 years and something that the U.S. is now doing to China can have a backlash effect as well. Not that we shouldn't be doing it, but you've got to keep your eye on how that's read in China. And so all of those things, I think, are a real concern, not a reason to say things are looking up from the perspective of the U.S. and China's relationship.
Well, the president's approach to China certainly getting a lot of criticism from Republican presidential candidates, say he's too soft on China. Case in point, Nikki Haley, who talked about it on Sunday morning on CNN.
How much more has to happen for Biden to realize you don't send cabinet members over to China to appease them? You start getting serious with China and say, we're not going to put up with it. They keep sending different cabinet officials over, Jake, and it's embarrassing. You sent Raimondo right after she got hacked. Her emails got hacked by the Chinese. You sent all of these cabinet officials over after a Chinese spy balloon went over our country. They are putting a Chinese spy base up on Cuba off the coast of Florida. And don't wait for the fact that they are going to be sending Chinese military troops there. What are we doing appeasing China?
Of course, the White House, Rick, thinks it's avoiding conflict, not appeasing China, but trying to keep the train on the tracks here and not have a real Cold War. Who's right?
Look, I mean, whether we like it or not, I mean, China is acting very provocatively. Nikki Haley is absolutely right. You know, their relations with the Solomon Islands is pressing our Pacific presence. Their bases in Djibouti or military bases, their spy locations in Cuba. I mean, I'd ask Jeannie, what the heck are we? How could we get criticism for going to places like Ukraine and Vietnam if this is the actions of our chief competitor, China? Look, whether we like it or not, and you can call it a Cold War, you can call it something else, but we are in an active global competition for the favor of nations that are free versus those that are associating with dictators around the world. And anybody who doesn't think that this is an active competition is misreading the tea leaves of the world movement right now. And so I really think that Nikki Haley nailed it right. I mean, she knows that this competition exists. She's seen it firsthand in the Trump administration, and I think, frankly, it is one of the very few presidential candidates who's espousing a more robust and capable U.S. foreign policy. And frankly, I'd much rather see Xi standing next to Nikki Haley than to President Biden, who somehow thinks that he deserves a break because he's got a bad economy.
Well, that brings us to the issue of the way he comported himself, some of the things that Joe Biden said on the visit. Jeannie, you can certainly weigh in on what Rick said, but you know, if you don't know whether it's morning or night, it is a little bit difficult to express authority or to project power, you might suggest. You had this moment.
It is evening, isn't it? This round the world in 5 days is interesting.
It is evening, he said. He was even asked how he was doing by a couple of reporters who told him that it was, in fact, evening time.
Good evening, Mr. President. How are you?
Well, thank you.
Good.
These 5-day trips around the world are no problem.
I can imagine. It is evening, I'd like to remind you.
These 5-day trips around the world, no problem, Jeannie. How did the president do? Did he just make his life more difficult here? Because when we're talking about the age issue, the cognitive issue, it's trips like these that people have in mind.
That's right. But, listen, if any of us went on a trip to India, to Vietnam, and back to Alaska, did what the president has done in 5 days, it's a long trip. I think he was making the kind of Biden offhanded comments that he usually makes, and it's no surprise for anybody who has followed him. And I also don't think anybody can accuse Joe Biden of not understanding the need to confront and contain China. He is the president who has done that arguably more than any president in the modern era, has turned our attention from China. To the Asia Pacific. He's gotten criticized today for not being here for 9/11. But let's not forget, he is willing to take that hit because he is coming back from a very important trip to India and to Vietnam to really, really make the case that we do have to focus our attention not on the Middle East, where it has been for the last 25 years for good reason, but to China, where we confront a big threat and we have a big competition. So I think it's short-sighted to say that he doesn't recognize that. I do agree with Rick on this. Members of his own party are not clear about this. Let's just think back to what Nikki Haley had to say to Vivek Ramaswamy and others during the debate. So there is a debate to be had in the Republican Party where they're even debating today, as they come back to the House, whether to give Ukraine the money it needs to have this confrontation with Russia. So those are things that the Republican Party does have to work out. There's a lot more unanimity on the side of the Democrats when it comes to that.
All right, a lot more with Rick and Jeannie straight ahead here after the trip to the G20 and Vietnam, including the McCain Memorial. World and national news now with Nancy Lyons. Let's go to the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hi, Joe. There are just a few days left before contracts expire Thursday with Detroit's big three automakers, and we're hearing Stellantis is reporting progress. But so far, counteroffers from the company have been given a thumbs down by UAW President Shawn Fain. Former Fed economist Claudia Sahm of Sahm Consulting says now is the time to strike a deal that's favorable to workers.
They took a really weak contract in 2009 because the automakers were kind of on the cliff's edge, and now the tables are turned, right? So I think this UAW, I think, is a very backward-looking, and I think it makes a lot of sense why they're asking what they're asking for.
Claudia Sahm was on Bloomberg surveillance. It's a day of commemorations 22 years after the 9/11 attacks.
A bell tolled for each of the fallen.
Petty Officer 3rd Class Daniel M. Caballero, United States Navy.
Defense Secretary Lloyd Austin eulogized all the victims of 9/11.
September 11th made America a nation at war. The wars in Iraq and Afghanistan have come to a close, but we remain relentlessly focused on combating terrorist threats to America.
Austin and General Mark Milley recall that the Pentagon remained open and in action even while rescue operations were in progress. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are trading very close to session highs right now. A 30-point advance in the S&P 500 index right now at 4487. That is a gain of 0.7%. The Dow up 115 points now, up by about 0.3%. The Nasdaq Composite Index higher by 142 points, up by 1%. We've got the 10-year now yielding 4.28% with a 2-year at 4.98%. Gold is up 0.2%, $19.23 the ounce, and West Texas Intermediate crude up 7 cents a barrel, 87.58 on WTI. That is a gain now of just about 0.1%. Stocks higher ahead of economic data that will help shape Wall Street's views of just how close the Federal Reserve is from ending its rate hikes. Indeed, a lot of moving parts to markets this week, including Apple, a potential auto industry strike, and a key report on consumer prices. So what is the most important event to follow this week? That question for Nisha Patel, portfolio manager at Parametric Portfolio Associates.
In my view, I think it's the CPI data. So I think, the market is, look, as we've seen with where 10-year Treasury yields have gone, there's a lot of optimism that we're going to outright avoid a recession, a significant slowdown. But inflation continues to be above that 2% target, right? So there needs to be that continuous momentum that it's trending downwards. Otherwise, there's going to be some concern that hawkish tilt that the Fed has, they're going to continue to raise rates, and you could see rates going higher from here.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. JetBlue has agreed to transfer some Spirit Airlines gates and flight slots at 3 airports to help lessen antitrust concerns over its pending acquisition of the low-cost carrier. JetBlue shares, they're down 0.1%. Spirit, which uses the ticker symbol SAVE, S-A-V-E, up now by 12.3%. Again, recapping, stocks are higher, up 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We've been talking a lot about China and the Biden administration's relationship, or lack thereof, with that country. It was a very different look in Vietnam. After the president left the G20, he went to Vietnam for a brief set of meetings where they did announce a comprehensive strategic partnership and enhanced trade relationship that puts the U.S. on par with China, which is something that the late Senator John McCain spent years pushing for. As we reassemble our panel with Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, some pretty touching moments and pretty good optics, I would argue, for the president in Vietnam as he visited the memorial to John McCain in Hanoi. He left a challenge coin at the memorial, laid a wreath, and spent some time talking with the 2 service members who was there. We should note, by the way, that former Secretary of State John Kerry, also, of course, a Vietnam War veteran, was also with him at that moment. Rick, I suspect that memorial wouldn't be there if it weren't in part for your efforts, and I wonder your thoughts as you see the president actually get business done in Vietnam that John McCain would have loved to have seen himself.
First of all, I had nothing to do with that memorial. Strictly the Vietnamese government put that up.
How about that?
Because I would not want to be held to blame for, on that memorial, it refers to John McCain as an Air Force air pirate. And he didn't mind being called an air pirate, but he did not like being called Air Force. That's a Navy pilot that was proud of his wings. So look, I mean, John McCain always had a fond memory of that lake because his arms and knees were broken when he ejected from his aircraft after being hit by a rocket, and he landed in the middle of that lake. And he said, if not for the Vietnamese that pulled him out of that lake, beating and stabbing him, he would have drowned. So, he always had a kind of quirky way of looking at things from an optimistic point of view. But I thought it was nice that the president stopped at that memorial and showed his respect to John McCain. And I think that, it just betrays what we need more of in foreign policy, which is we can debate all we want at home, but when it comes to what we think the overseas priorities of our country are, they should be together. And John McCain and President Biden had a lot of disagreements, but ultimately, when they came together, they did good things for the country abroad, and were on the same page more than they weren't. So kudos to the president for taking time out of his schedule to do that.
Jeannie, I'm struck by the name of Franklin Foer's book about Joe Biden, The Last Politician. The optics of this visit to the memorial, Joe Biden coming to the aid of Mitch McConnell, at least optically speaking. Again, when he was asked by reporters about Mitch McConnell's freezing up before the cameras, it does feel like it's the end of an era, or at least a generation in politics, when you see these events unfold before your eyes.
It absolutely does. And, you know, I talk to students every day between the ages of, 17 to 22, 23. And for them, I know we're going to be talking about 9/11 in a little bit. They weren't even born, many of them, when 9/11 occurred, which is, hard to even wrap your head around. And as they look at politicians like Joe Biden or Mitch McConnell or Nancy Pelosi, or think about people like the former Senator John McCain, these do seem like relics to a certain extent from a past generation. I have to say, I really thought it was a very good visit to Hanoi. The president described this as a historic moment, overcoming a bitter past, and that is an apt description. And for Vietnam to put the U.S. in its highest diplomatic category, on par with China, that is a big advance as well. So everything from the discussion of semiconductors, the memorializing John McCain, those are all important, as was the president's diplomatic outreach to Hanoi. These are very big steps forward for the president and for the United States from a foreign policy and economic perspective.
Mm-hmm. We're going to bring in David Weston, as I promised, in just a moment, to talk with us on this September 11th. I'd love to hear from both of you on what the president is and is not doing today. Quickly, before we get to David, Rick, is it a problem that Joe Biden is swinging through Alaska on his way back to mark this occasion instead of being at Ground Zero at the Pentagon or in Shanksville?
Yeah, I think that if the trade-off was doing, as Jeannie described, the work that he did in Vietnam, I think it was well worth the trade-off. Joe Biden's been making these visits on 9/11 for 22 years, and I don't think there's any criticism that should be sent his way. This is a day where, frankly, bipartisanship should reign supreme.
Yeah. He will be delivering remarks, Jeannie. He is, in fact, paying tribute on this day. Does it matter where you are as the commander-in-chief?
I think ideally you do want to be at one of the memorials, but he is one person. He can't be everywhere. He made the hard decision to do this very important foreign policy trip, and he sent the vice president in his wake to New York. So, it's probably not exactly where he wants to be, but he had to make a tough choice like all leaders, and he made it. And I think from everybody's perspective, it is the right choice, but it is important that he's going to stop and take time to remember the victims.
Yeah. Great to have you both here. Great conversation today. Jeannie Shanzano and Rick Davis, our signature panel on Sound On, Bloomberg Politics contributors. The question you'll surely hear someone ask today, and maybe you've been asked already in the office or as you're going to the store or whatever your day includes here, is where were you on 9/11? For many, the answer is at home, right? It was in the morning, watching TV, watching morning shows like Good Morning America, GMA, where the anchors had no idea what was unfolding.
We want to tell you what we know as we know it. But we just got a report in that there's been some sort of explosion at the World Trade Center in New York City. One report said, and we can't confirm any of this, that a plane may have hit one of the two towers of the World Trade Center. But again, you're seeing the live pictures here.
Bloomberg's David Weston was at work that morning as we hear Diane Sawyer talking there on GMA. David was the president of ABC News, and he joins us right now from New York to recall the events of that day and what they would lead to. David, thank you for being here. I'm so glad that you could join us. You were watching GMA as the boss. What did you think? What went through your mind when you heard Diane Sawyer say this?
Well, a lot goes through my mind. Even as I listened to it again, I remember it terribly well. I mean, I used to get in every morning before 7 o'clock because that's when Good Morning America came on the air. And I watched like 5 or 6 monitors that I had in my office to see what everybody was doing. And I remember looking up when we were in commercial break, actually, on GMA, and seeing on CNN sort of smoke coming out of a high level of one of the trade towers. And I turned down that volume to figure out what was going on. At that point, nobody had any idea what it was, but I called down to the control room and said, something's going on at the World Trade Center, get out of commercial, go to the full network. And we went to the full network, really, as you could hear from Diane, not fully aware of what had happened, but there were reports there was an aircraft that had gone in, and they went to full network mode, special report we called it. And as they watched, it was Diane Sawyer and Charlie Gibson, we all watched together as that second airliner went crashing into the second tower, and Charlie said, you know, it looks like an airliner's just gone on the second tower.
What happens next in a situation like that? You know, people are watching the anchors, but there are dozens, if not a couple of hundred folks behind them. What happened internally at ABC News? Do you pick up the phone? Who do you start calling?
Well, you get the desk is there. You get everybody in as fast as you can, figure out where people are. Frankly, Joe, one of the first questions is, where are our people? Do we have any people who are at risk down at the World Trade Center? And where else could there be an attack? I will say we were, I'm not sure fortunate is the right word, but we were in a position to have an idea about Osama bin Laden and Al-Qaeda, because John Miller, who worked for us, had trekked into Afghanistan about 18 months before, and we had aired what turned out to be the last Western interview with Osama bin Laden from his camp in Afghanistan. We had covered that story, and I had talked, frankly, with some senior military people in the months before, saying, what's the biggest threat we have? And they said to a person, it's a terrorist attack. And so I had a pretty good sense pretty early on that it was terrorism, and then it was Al-Qaeda. So in that sense, we had a little bit of a jump on it. But then you figure out how can you cover the story as best you can. Who can you get down there? A close follow-on to that is, can we send them down there safely? We had a whole discussion, not a long one, but a discussion. Do they have to have hazmat suits on? Because we're not sure what this was and what the effects might be on the people in the surrounding areas. How can we get video out of there? We're a television organization. You got to get video out of there. How are we going to audio? We were fortunate because we had Don Daler, one of our reporters, who actually lived near there, and he got on the telephone pretty quickly.
It also turned out that you had a reporter pretty close to the scene, but didn't realize, following a series of emails from what appeared to be a stranger, that George Stephanopoulos was trying to get news to the newsroom.
Boy, you know, I'd forgotten about that, Joe. That's exactly right. Poor George was down there trying to get through, and everybody thought it was a crank call. It took us quite a while to figure out that actually, yes, George actually was nearby, near Ground Zero, and he was trying to report, and we finally got him in the air. And we got John Miller in the chair pretty quickly. We stuck with Diane and with Charlie for about 40 or 45 minutes. Peter Jennings was in the building, and he was reluctant, frankly, to go on because he said they're doing such a good job. But I said, Peter, I mean, you're our lead anchor. You got to get in the chair. And he sat there with John Miller, and we covered. You know, we went on right through till Saturday morning, no nonstop, no commercial breaks, no nothing. But we covered it in part that first day with John Miller tapping into police frequencies, because he'd been in the police department and he had a bunch of buddies there, and he was giving us a lot of the reporting.
You mentioned you try to find out who you have, and you had a reporter on Air Force One. I don't know how long it was before you were able to make contact with Ann Compton, David, but her story is iconic.
Well, Ann Compton happened to be the radio pool that day, and wonderful radio, longtime White House correspondent for ABC News and ABC News Radio. And we all remember President George W. Bush was in Florida speaking actually to an elementary school class when this all happened. We've all seen that iconic video when they first told him what was going on. And then they hurried everybody onto Air Force One. President Bush made a couple of brief remarks. They hurried him onto Air Force One because they wanted to get him, make sure he was safe. They weren't sure how to attack him. And so we just were told, Ann's on the plane. She called in. She said, we're going, wheels up, but we don't know where we're going. I don't know when I can talk to you. I'll let you know. And so next time we heard from her, they had put down, actually in Louisiana, as I recall, where the base was, for refueling. And she gave us from the tarmac a quick report on what was going on Air Force One. Then they took off again, and they went to another air base. And again, she talked to us from there. President Bush spoke from there, because he didn't make it back to Washington actually until that evening, and then addressed the nation from the Oval Office.
That's incredible. to think that you had people truly in all of the right places. You couldn't have planned it better if you had been given a tip on this, David. But I'm talking to you now as someone who our viewers and listeners know as a journalist, as a broadcast journalist, an anchor, the guy who asks the questions. You were an executive at that point as the president of ABC News. To what extent did the events of that day and the following days inform your next career that you now enjoy?
Well, I think, as you know, Joe, as well or better than I do, everything you've ever experienced or known or done informs what you do when you're in these jobs on the air. But it's a very different thing. One of the wonderful experiences of being on the air, having spent so much time, I was there for 14 years, behind the camera, is you have to understand of what else is in the iceberg, the stuff below the surface. And I'll give you a couple of examples. For example, one of the first things we did was we marshaled as much troops as we could get down to the hospitals in the area because we were convinced there would be all kinds of wounded coming in. And then as the day unfolded, we realized nobody was coming because they were all dead. And it was a terrible moment. Another moment, an hour into it, I got a call in the control room saying there are people jumping from the towers. Do we show it?
Yeah.
And I said, no, you report they're jumping, but you do not show, because that's somebody's loved one that they're seeing commit suicide, essentially.
Just absolutely horrible to think that this happened and that we watched it as it was happening. David, it was folks like you making those decisions. And I know that you held an event with some children. I heard you speak about this, school children, which was a Saturday morning show that Peter Jennings used to conduct. And this was about telling them about what happened on 9/11 and showing them the actual video. They couldn't discern between what was happening then and whether it was real now. And I bring this to you because it's something that every television news network has to grapple with. And some have annually shown the video of the towers being hit, of people jumping, of the towers falling. You made the decision not to do that, didn't you?
No, I did. As a result of that town hall meeting with the children, Peter Jennings was, I think, the best breaking news anchor ever. But he was particularly gifted with children, and he wanted to do, and we wanted to do a special that Saturday to try to explain to kids what had happened. And we actually had a professor of child psychology from Princeton there who said, one of the things you have to understand is small children don't understand it's not happening again. They think that every time they see it, there's another building going down. And so from the car on the way home, I got on the phone to the desk and I said, okay, we will never show moving video of that again on ABC News. We'll show a still, but never moving video. Because at that point, Joe, it had become almost like music. People were putting in their bumpers. They were putting in their promos. I mean, you kept seeing these towers collapse. And it wasn't telling anybody. I mean, it wasn't communicating. It was just pure emotion. And I said, we'll never do it again. And we didn't. We never showed a moving image again because it wasn't informing anybody. It was just pushing buttons that we didn't need to push.
I think that's incredible. And it's so important here while we look back 22 years later, because some networks continue to show this in promotional framing, to your point. And I would say this isn't just about kids, David. I don't think adults in many cases are helped by seeing that over again, are they?
No, I don't think so. There's no information I'm getting. But again, I want to go back to the relatives, the loved ones of those people. They're watching their loved ones die. And, you know, again and again. What are we getting out of that? But I'll just add one other thing that people may not understand. We spent hours that day not being able to get any information out of the government. Now, in fairness, they didn't know what was going on, but the president was in the air. The vice president was on some protected location beneath the White House. And we kept trying to get anybody from the government to tell us what's going on. We got silence, with one exception. I'll give him great credit. George Pataki, the governor of New York, would actually get on the phone and say, this is what we know, we don't know. Because we had reports coming in of all kinds of bizarre things happening. We couldn't confirm or deny. And the question is, do you report it?
Yeah. Is this the first thing you thought about when you woke up today?
Of course, yeah, always. Always. But by the way, your discussion about President Biden not being in town, in some sense, you know, it's kind of sad because we're not making big deals. In some ways, it's healthy.
Yeah, yeah.
We need to go on. We need to remember it, but we need to recover. We need to go on. We couldn't live, I couldn't live at that level of emotional distress that we had in the days and the weeks and even the months after 9/11. You have to get over it and go on with your life sometime.
I can't thank you enough for sharing that with us. David Weston, our dear friend at Bloomberg, and of course, one of many lives that changed that day. Thank you, David. I'm Joe Matthew in Washington. Hour 2 of Sound On starts now.
nation's capital. This is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the eight ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
They're back tomorrow. What could go wrong? Welcome to Hour 2 of Sound On as members of the U.S. House prepare their return to the U.S. Capitol a week after the Senate got back. It's been a good recess for some, with a showdown looming over the budget and a shutdown that could be looming as well. We're going to get into this with Bloomberg politics reporter Gregory Corti coming up next. And we'll talk with Mick Mulvaney, former congressman, of course, co-founder of the Freedom Caucus, former acting chief of staff in the Trump White House. Later, we'll add Bloomberg government's Jack Fitzpatrick to this conversation with his eye on appropriations, and we'll set the table for what could be a massive auto strike later on this week with Bloomberg Detroit bureau chief David Welch. A lot to talk about, as always, in part 2 of Sound On. Let's start on Wall Street. Charlie Pellet brings us an update.
Thanks very much, Joe Matthew. Indeed, a lot of moving parts in today's trading with the Dow, the S&P, NASDAQ, all advancing. Very busy week for markets. Lots to digest coming up this week, and a great reason, of course, to keep it locked into Bloomberg Radio. We've got the S&P up 28 points right now, up by about 0.6%. The Dow up 90 points, higher by 0.3%. NASDAQ, the composite index, now up 151, up by 1.1%. The 10-year yield right now at 4.28%. We've got the 2-year yielding 4.97%. Spot gold up $3.50 the ounce now to $19.22, a gain there of 0.2%. And West Texas Intermediate crude down 0.3%, 87.27 a barrel on WTI. Stocks are gaining ahead of economic data that will help shape Wall Street's views on how close the Fed is from ending its rate hikes. As for the economic backdrop, Jay Pulaski is Chief Investment Officer and co-founder of TPW Investment Management.
We actually think the Fed is going to double its 2023 GDP forecast next week. And currently, the consensus for U.S. GDP next year is 0.9%. We think that's way too low. So we expect growth to continue to develop over the course of the coming year.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. J.M. Smucker has agreed to acquire Hostess Brands, the maker of Twinkie snack cakes, for about $5.6 billion, including $900 million in debt. Now, shares of Smucker, they are down now by 6.8%. Shares right now of Hostess Brands, they are surging by 19.4%. Again, recapping, stocks higher, S&P up 29 points, up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie. Thank you, and welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington, where we found Kaylee Lines, as always, joining me at the table here. And it's about to get real in Washington.
Yeah.
They start flying in tonight, and tomorrow it's on.
After
US
6
House
long weeks
back.
away.
Seems like more than that, I have to admit. But in August recess, that was the better part of the summer.
Yep.
What was it, 41 days for the Senate? Add a week for the House. If only we could all get jobs like that, I guess. But that's so cliche around here, isn't it?
Yeah.
I don't mean to be that guy.
Must be nice to have had a break, but they certainly have their work cut out for them upon their return.
Right, yes.
Because the clock is ticking toward a potential government shutdown on September 30th if they can't get something together, whether or not it's passing 12 appropriations bills or potentially a continuing resolution, just kick the can. Either way, it's going to be very difficult for House Speaker Kevin McCarthy. I can't imagine he's super enthused to return to the Capitol, knowing what he's facing.
I could see him back there in the suit and sneakers, smiling, bouncing around tomorrow. He's Mr. Positive.
Do a selfie line.
Yeah, I don't know. I don't know. It's just, it's funny to me that we've been talking about this for well over a month, almost every day. And nothing has changed the whole time that they've been gone. Imagine the life of Gregory Corti. Bloomberg politics reporter is with us at the table. Gregory, good to see you. Everybody knows how this is going to play out, it seems like, but we're going to go through the motions anyway. And Kevin McCarthy seems to think if they can clear a couple of appropriations bills, maybe he'll have some leverage. Is that the case? Because one, I believe, got through committee in the House as opposed to all 12 in the Senate.
Yeah, I mean, it's the age-old story of Washington where nobody can agree on the things they agree on because of the things they disagree on. And everything gets done at the deadline. And most of these impasses get settled at the last minute, but we have to wait and hold our breath until that last minute for that to happen. But then every once in a while, one of these goes off the cliff, and this one seems to have the makings of some volatile components that this could well go off the cliff. There's a lot of lingering resentments over the debt limit deal, which, by the way, was a far bigger threat to the economy.
The defaults.
Right.
The